Morning traders, Anthony Crudele here, and welcome to NinjaTrader live in studio. Of course, I'm joined by our senior economist, Tracy Shuchart, otherwise known as Shy Girl. And we have a special guest today in studio, Craig Shapiro, macro strategist from the Bear Traps Report. Craig, welcome to in studio.
Thanks for having me. Greatly appreciated. Pleasure to be here.
A lot to talk about today, guys. So, Craig, I just want to start with you and just give us, I mean, look at, man, so much has happened lately. We've talked about how the market environment has shifted once again, where now this morning you and I were talking about it, how it's like, finally a tamer market. And I just put out my morning note and I said, momentum's a real thing. We had big downward momentum. Then you had the 90-day pause, the on again, off again tariff situation. And now we're kind of in this, I don't want to say doldrum because I still think the markets are going to be pretty busy, but what's your overall take on where we are right now?
Yeah. Well, I mean, Trump's favorite word or fifth favorite word now, tariffs. I mean, so, anybody who didn't think that he was serious about tariffs, I think, was fooling themselves. But I think the implementation and the rollout of this tariff strategy has been flawed, has been mistake-ridden, and I think the administration underestimated the market impact. And I'm surprised. I mean, Secretary Besson is a markets guy, so I'm a little surprised that they were surprised. But volatility, cross-asset volatility has exploded, since Liberation Day. And I think what we saw last week was an administration that got a little nervous and felt like they needed to backtrack a bit with this 90-day pause. But that's all it was. It was a pause. And we still have structurally higher tariff regime coming in the economy. We still have uncertainty. So CEOs are, about to go through an earnings reporting season where they're going to be talking about, soft outlooks and uncertain outlooks. And so not really, such a constructive backdrop for equities. And we have all these negotiations that are going on with various countries coming in. And so I think the administration took a little bit of heat off the boil, but we're still in this uncertain environment. So I am also a bit concerned here as we transition through earnings season and over the next several weeks that we're going to be in for some sloppy trading to continue.
Yeah, this morning we're going to get a chance to use our big board, so maybe we get our meme up there this morning, and then we'll get to that in a minute. But I want to follow up with you something that you said, Craig, and I think this is really important, is that the pivot was not part of the plan. That's what your take is, right? That they did this because credit markets were getting stressed. Obviously, market volatility was getting, pretty crazy. Not the craziest we've ever seen. I think also that's important to know, right? I mean, it was busy. I think just because the price of where we are in S&P and NASDAQ, percentage moves are just so much bigger now. But you don't think it was part of the plan?
No. I mean, the administration has said that the tariffs would lead to, exporting countries bearing some of the brunt. So the dollar would rally, other countries would take some of the currency hit. And Besson has been talking about lower yields. And so when the reaction to Liberation Day was a much weaker dollar and much higher yields, and then much lower stock prices, I think that was a triple whammy for the administration to say, okay, maybe we got this wrong. And there's been plenty of people in FinTwit who are trying to justify this, and this is all part of the plan. This is 5D chess. I just don't believe it. I don't think it was at all. But look, I think that the administration has a plan where they want the country to go from a manufacturing renaissance perspective and bringing jobs back, and a weaker dollar is going to be part of that over time. And so I think they are going to keep pushing forward with this agenda, and hopefully, we'll be able to transition to some of the good parts of the administration's plan on tax cuts, on deregulation, on supply side reform, on lower energy in the future. But we got to get there first. And so now it's still uncertain environment. Tariffs are going to be here. We're going to get these semiconductor sectoral tariffs, probably going to be 25%. We're going to get pharma tariffs that are going to be 25%. So I think there's still a bit of wood to chop here from the tariff regime, and companies are sitting on their hands. And so I think that's a problematic setup, I think, for equities.
Yeah, I mean, and companies sitting on their hands, rightfully so. I mean, this is an uncertain environment. And, I always think about when people say this market doesn't like uncertainty. This really defines that, right? Because nobody's ever really certain about anything. But when you're really uncertain of policy and how you can manage your business going forward, that to me is what we're witnessing right now. Shai, I want to bring you in. What happened overnight? I know we had some new headlines this morning that were pretty important. Lay out today's landscape for us for news.
So we had China say they were halting deliveries of Boeing. So that's
kind of a big deal.
Kind of an escalation with China, even though we're supposedly talking to them. There was a meeting with the Iran Supreme Leader, obviously about the U.S. nuclear deal, which obviously this would affect Russia, or would affect oil deliveries because they're trying to stop Iran from exporting as much oil to cut their revenue. So anyway, long short of it, he said he came back. I'm very pessimistic towards the other side regarding Iran-U.S. talks. So those talks seem to have stalled out again. So we'll see what happens with that. We got a rally overnight in automobiles due to the tariff pause that happened yesterday afternoon. And we had a big drop again in the yuan.
Initial thoughts on some of this overnight morning news, Craig?
Yeah, I think this is the back and forth we're going to get. We're going to get, sometimes we ratchet it up, sometimes we ratchet it back down. Sometimes our allies are going to ratchet their side up or ratchet down. China's going to ratchet their up. I mean, I think this morning I saw something from Japan that's looking to, in their negotiations, have all the tariffs removed. Right. So if part of the plan from tariffs perspective from the administration was as a revenue generator, part of it is to bring jobs back. Well, if we're going to get no tariffs, then how are we going to bring in revenues? And if you think about the tax cut regime that Trump wants to employ, if we don't get some revenue backfill, then we're going to have a budget deficit further exploding. And another part of the administration's scorecard was bringing down the budget deficit. Because if you bring down the budget deficit, that will help bring down inflation. That could bring down interest rates. That has a virtuous circle for borrowing costs in the economy. Well, if we're not bringing in tariff revenues, how are we going to fund these tax cuts? And ultimately, maybe we'll get to a situation where we just do the tax cuts and we don't do any deficit reduction. And then what does that mean for the long end of the bond market, right? So all these things are working together. I do think one thing that is consistent, though, is that Trump has alienated foreigners. He's alienated leaders of other countries. He has alienated investors in other countries. And I think what he's doing is telling foreigners it's time to take your capital out of the United States asset markets, whether that be treasuries, equities, credit. I think he would prefer foreigners invest directly in manufacturing and infrastructure capacity in America. But as far as their ownership of securities, I think he views that as part of the reason the dollar has been too strong is because of this. And so whether it's sanctions, whether it's this America First investment policy, whether it's talking about removing Chinese securities from U.S. exchanges, right? I mean, they're doing things here, potentially taxing foreign holdings of U.S. treasuries. I mean, there's momentum here on trying to get foreigners to remove capital out of the United States securities markets. And what that'll do is that'll weaken the dollar. And I think that's a coordinated plan. I think that's something that they're trying to do.
Yeah, let's take us to the wide. I want to show a meme. I always get a kick out of these on Twitter. I think they're pretty funny. And this morning I was going through and I saw this, and this one, it was a viral tweet. It said, "My tariffs aren't working." On the phone with a tech support guy. Have you tried turning them on and off again? And this to me is one of those things where when you look at the situation, it's kind of funny, and it sheds some light on where I think we really are with this. But I think where I want to go back to you, Shai, is it says my tariffs aren't working. But you hear, Craig, some of the things that they want to do, they are working. So, right, I mean, I think a lot of people solely look at equities and say, oh, these aren't working, right? I mean, and we make a joke with this turning on and off again, and I look at that. That's really what's happening. I mean, let's be honest, right? But some things are working. Talk to us about what you believe the tariffs are doing that is going according to plan with the administration?
Well, I think, particularly if we are looking at PAC Asia, Trump really wants to sell U.S. LNG, right? And so he is talking to South Korea, Japan, Taiwan, all to increase their LNG imports from the United States and using that as leverage to possibly lower tariffs. Same thing with India, and same thing, but on a different perspective with Germany.
I want to go back to you, Craig, about the bond market, because when I go back and look at, what was it, just a week ago, man, time goes by. It's like, I don't know if time's going by like really fast, or I'm in this matrix of time right now where it's hard to remember what was 1 week or 2 weeks ago. But we're looking at the bond market. Originally, it was rallying, right? So we saw rates coming down. We saw dollar getting weaker. We talked about this, Shai. Then all of a sudden, literally, I felt like it was, I don't remember which day again it was, but all of a sudden you just saw the bond market just falling hard with equities. And it goes back to what you were saying, is basically I think that there was this new realization out there that the bond market is not a flight to quality right now in this type of situation that a lot of people were looking for. And they were going down with velocity. It's not that the bond market going down, I thought, was a big concern for equities. I think that the rate that they were going down was a concern. And I think the possibility of rates accelerating to the upside on the long end is a major concern. And this goes back to what you were talking about with, other countries are selling our bonds now. And so what are the impacts of that? Because I think that's the biggest story right now, really, that is yet to really unfold here. Yeah.
No, it did seem like it was the move in the bond market that spooked the administration to this backtrack. Part of that move in the bond market was this basis trade unwind, of futures versus cash trades. And that is just a function of levered entities that are seeing volatility pick up or being forced to deleverage positions. And so a good degree of the bond sell-off was likely that. But there had been, rumblings in the markets that either Japan or China was selling. I mean, we won't know, and we won't know for another 2 months or so until the tick data comes out. But I think there's enough people out there that have relationships that could feel pretty confident that foreigners are selling into some degree. And I think evidence of that would be the fact that we saw the dollar weak and bonds weak and stocks weak all at the same time. It's a very in a risk-off environment. I mean, when was the last time in a risk-off setting we saw all three of those happen? And so I think it's really indicative of the fact that foreigners are saying, there's too much uncertainty here. A lot of the recent capital, let's say over the last 12 months, running into the administration, coming to power from foreigners was unhedged, right? Foreigners were investing in U.S. equity markets unhedged. And so if you have unhedged positions and the dollar's weakening and stocks are weakening and bonds are weakening, you're kind of getting it double whammy or triple whammy if you're a European investor, you're a Swiss investor, you're a Japanese investor. And so those small moves in the equity market moves were exacerbated by the dollar move. So I think that was going on for sure. And look, I think the deficit situation is a problem in the U.S. If we're not going to cut deficits here, foreigners are going to be concerned about long-term inflation and how they're getting paid back. If we're going to think about taxing foreign holdings of U.S. treasuries, foreigners are going to think about removing their holdings of treasuries. We've already proven that we're willing to sanction anybody, really, for anything. And that's been going on for nearly 3 years now with the start of Russian sanctions when they went to Ukraine. So foreigners have less confidence that they're going to be paid back. They're going to remove their money out. And I think that's also been a big part of the reason why gold has been outperforming, right? The gold is becoming increasingly this neutral reserve asset that foreigners can move money into. If they don't want to move money back into their own domestic economies, they can kind of store it temporarily in gold. And out of U.S. treasuries, that's been a big driver of gold's positive price momentum as well.
Let's talk about metals. You look at everything that's happening overnight. You got dollar relatively flat against other currencies this morning. Crude oil kind of muted session, pulling back just a touch. What's bid again? Gold. The thing is just bid. We talked about this yesterday. Of all the primary trends that we see, you've got macro and you've got technical supporting it. Those are the most powerful trends. Shai, anything you want to comment on what continues to be really this gold bull market story?
Yeah, well, I think honestly, I think this really started catching momentum back in 2022 with the Russian invasion of Ukraine, and where ECB and the Federal Reserve, we basically confiscated Russia's money. And I think that was parked there. And so I think really that's when we really started to see central banks really starting to buy a lot of gold. And so I think that just initially where the trend really started gaining momentum.
Craig, talk to us about gold and what you guys are seeing in this market.
Yeah, I think one of the things that surprised U.S. investors about gold's outperformance has been historically gold has had this inverse correlation to real rates, right? And so when real rates are falling, gold typically outperforms. And what we've seen over the course, or at least through much of last year, was real rates rising and gold was rising. And so I think U.S. investors were slow on the uptake here to figure out what was going on. I think ultimately what I believe is happening is the U.S. is acting more like an emerging market in a lot of ways, right? I mean, we have deficit spending with no control. We have inflation that continues to run above target. We have erratic policy, going on the fiscal side. We have a Federal Reserve that, frankly, hasn't done a good enough job slaying inflation. And so what winds up happening in emerging markets is that real rates rising actually moves in concert with gold moving higher, because gold is anticipating that there'll be a run on the currency. And I think we're seeing that to some degree. I know it's crazy to say the U.S. is losing dollar, reserve currency status, but in a lot of ways, foreigners are finding reason to at least store excess trade reserves away from the United States. And so that foreign demand for bonds, and particularly for long-end bonds, is being reduced, and it's being replaced by these hedge funds, by basis trade, by this carry trade. And so that's a more unstable buyer of treasuries. It's more price sensitive than historically central banks have been. And so we're creating more volatility in the long end of the bond market, which I think is self-defeating, right? If we're more volatile, then these funds can hold less. And so there's less demand from that perspective. And so I think there's this general upward pressure on long end yields that we're going to have to eventually deal with here.
What do you think? Does this put the Federal Reserve in sort of a pickle at this point? Like, what do they do at this point without causing stagflation?
Yeah, I think folks are looking for the Federal Reserve to step in. People have been conditioned to the Fed put for a very long time. And so, the question here is, what can the Fed do and why would they do it? I mean, just from a monetary policy perspective right now, inflation continues to run above target. And there was a speech you referenced, earlier, this Waller speech from yesterday, where he talked about if we have the hawkish case for tariffs, we may have 5% inflation by the end of the year. And so, we're continuing to run inflation well above normal. The Fed's going to have trouble bringing rates down in that environment. And so then the question is, well, what should they do on the bond market? Or should they do anything? And the Fed's other mandate is financial stability, right? And so if the U.S. Treasury market starts to dysfunction, the Fed could step in with, eliminating QT. They could, possibly re-engage in QE. But the Fed's also set up facilities for this, right? They have a standing repo facility. They have the discount window. They've already set up a lot of things. And so I think Besson was out yesterday saying we don't really see any issue here. We're not at the break glass moment. And I think that's right. I think that, rates aren't even at 5%. I mean, we're basically in the average of yields on the 10-year for the last 2.5 years here right now. So I don't really know why the Fed is being asked to do anything. I think we always know that if things got crazy, they would, but I don't suspect that they're crazy at all right now. And I don't think the Fed wants to step in here to do much ahead of Trump. I think they're basically saying, look, this is a fiscal and government policy issue on tariffs, and that's the government's plan. And so us acting ahead of that in still an uncertain environment is basically just us wasting bullets, right? Cost of capital is not the deterrent to economic activity right now. If you got a 25 basis point rate cut, it's not going to do anything. I mean, no one's going to borrow more now because rates are down 25 basis points. It's clearing up the uncertainty that is needed. And so I think for now, the Fed is on hold. Powell speaks tomorrow, and there's always an expectation that he will be dovish. But what's he going? Well, I mean, really, what's he going to say? I mean, he's going to say, the economy, the hard data is fine. We're watching, we're waiting. It's still uncertain. We need to see the impacts, and I think he's going to keep pushing out the start or the restart of rate cuts.
And all the other governors have been quite hawkish over the last few weeks, so this is not something new. What surprises me is the market keeps factoring in more and more rate cuts when they are coming out and basically saying we're worried about inflation and there's not a problem in employment right now.
Right. I mean, and the real thing, or one thing we have also is we have an inflation expectations problem, right? I mean, you have these Michigan surveys and the Conference Board surveys of inflation expectations are, through the roof. And even yesterday, the New York Fed, their survey came in well above expected. And so the Fed's biggest risk is losing anchoring on long-term inflation expectations. If society thinks the prices are going up and continues to act ahead of that, then that becomes a self-fulfilling issue. And so I think the Fed needs to make sure that inflation expectations don't become unanchored. And so they will, I think, remain hawkish to make sure that doesn't happen. And I think the market's going to be disappointed with the start date of the rate cut regime. And the longer we go before the Fed is providing accommodation again, I think that's the worse it is for risk asset markets. So we're kind of in this bizarre reflexive loop where the markets learn that the Fed's not coming. They sell off. We find the next level of the put. Right. We found the first put strike last week. It was Trump's put strike. I think we're gonna search again for where the next put strike is, and will it come from Trump or will it come from the Fed? If we're waiting for the Fed, I think it's a lot lower than here.
I agree 100% of what you're saying there, because we're now in this search and seek mode for what's the next
equilibrium.
Headline. Yeah.
Like somewhere, right?
Exactly. And, this is why I said coming into yesterday, I said, the environment's changed. We have this initial low. It sucked the volatility out of the market for now, right? But it didn't instill confidence to bring us back to a bull market. I think that's the number one thing. So many people out there are looking at this going, oh, well, potentially the low is in. And, people maybe just, on Main Street looking at it go, well, I withstood that storm. This storm is still brewing. That was not something that to me brings us back to like, oh, you're going to see buy the dippers come back and buy into rallies. I just don't see it. Why would you allocate capital here right now? We talk to people like you. We've got Shy every day. I just don't see it. I mean, we talked about, Bianca was saying this. Everybody we've talked to so far, Martin yesterday, and so I think that what this does is it just calms things for now, which they needed to do. Let's face it. We could say that, we could kind of joke a little bit and say that, they're on and again, off again. But in reality, is it could have gotten pretty ugly for a lot of things, and it's stalled for now, but it's not gone away. And I think that now we're in this mode. So for traders, our audience, how do we navigate in this, right? And I think what gets really interesting is I think in the short term, technicals become much more of a prominent player in this, because we went from such high volatility where technicals were kind of like, you had to go back to people were on the show looking at monthly and quarterly charts. Now I think short-term technicals make their way back in. And eventually, if you start to see breakdowns again, what does happen, right? And that's what gets really interesting. And one of the breakdowns I'm going to be watching the most is the bond market. Again, if long ends, Craig, talk to us about this. If they continue to go lower, is that the market that we should be watching, or what is the market we should be watching right now for where we start to see things potentially start to feel like they're breaking, and people use that term, or cracking again, to where it does bring real concern to equities?
Yeah, I do. I agree. I think the long end is a place to focus, and I also think the dollar is a real place to be focusing here. I think ultimately to bring back manufacturing and jobs, we're going to need a much weaker dollar. And you look back to when Trump exited office, the DXY was down at 90. So we're at 99. I mean, so I think there's room here for the dollar to continue to depreciate. Now, historically, people would look at that as more of a risk-on environment, exactly. Right? So, dollar weak, buy everything. And I think in this case, if the dollar is weakening because foreigners are selling U.S. dollar assets because they want to remove their money from the U.S. for a variety of reasons, or they're seeing better opportunities now at home, whether it's German defense and infrastructure spending, whether it's Chinese spending on their domestic economy, whether it's Japan doing that, whatever it is, we're seeing this U.S. exceptionalism trade that has been with us for decades is starting to unravel. And I think, U.S. Securities as a percentage of total market cap was up at like 70%. I mean, so we have some ability here to kind of move that back to long-term averages. I mean, the U.S. is what, 20-30% of the global economy. Why are we 2.5 times of global market cap of stocks? So I think that grind down of the dollar with foreign selling kind of keeps more pressure on U.S. equities. And so we may continue to have a U.S. underperformance trade now to be watching. So I'd be looking for that. I'd be looking to, kind of keep the dollar weak in the back of your mind, which should continue to be good for gold. It's likely to continue to be good for commodities broadly on a relative basis for sure, and should be, an issue for kind of big cap U.S. equities that have been the beneficiary of this U.S. exceptionalism trade for a long time.
Yeah, I think that is the theme. Shai, we're about 3 minutes out from data this morning, I believe. Give us a quick preview of what we're looking at for today's economic data, specifically these morning numbers.
Yeah, so we've got New York State Empire Manufacturing. People will be looking at that. Energy markets will be looking at that. We had prior was minus 20, bad. Survey is minus 13.5. We'll see if we keep seeing deterioration in that market, in that New York market for manufacturing. That is kind of important. And then we have import and export price index.
Expected to be much market movers this morning, guys? You think this is going to do much to us right now?
I don't think it's a broad market mover. I think it's, again, I go back to it's an econ data point, not a market moving data point.
Got it. Yeah, I mean, I'll be keeping the bonds up this morning. I'm looking at the 10-year and the 30-year. This morning you got 10-year rate 4.3. Again, Craig, like this is not that big of a deal at 4.3. Again, it's going to be what does it do from here? And I think the number one thing that I look at when I look at the bond market, and I don't think day traders need to look at it, every single day, like on a chart directly next to the S&P, what you have to watch for is how fast is it really moving? The acceleration of the bond market. If rates are inching higher, I think market can digest it, and the market always finds a way, right? Market finds a way to make money, right? I mean, that's what these businesses do. But if rates start going up quickly, that to me is the trigger to where I don't care what's going on with tariffs. If there's no headlines, I see bond markets going down quickly. I don't see equities holding rallies.
Yeah. No, I agree with that. I think rate of change is something to keep in mind. And if you think about, policymakers are in the vol dampening business, right? That's what they do. Whether it's the Fed, whether it's the administration, whether it's Treasury, whether it's OPEC, whether it's the PBOC, whatever it is. When volatility gets too high, they do something to lower volatility because societies can't function in that level of volatility world. When what we're always searching for is the pain point, is the threshold, is how much volatility is too much volatility. And we can't exist in a 60 VIX world. We can't exist with the move index above 150, which was what it was at the early part of last week. These are annualized rates of change that are again, like, I think Harley Bassman, who created the move index, basically said like the human mind can't understand a move index above 150. And he's right. I mean, the rate of change is just too high. And so we're always in search of when policymakers are going to act to dampen volatility. And so we had that last week. Now we're finding maybe a new equilibrium point. But as uncertainty exists and the economy decays, volatility is going to pick back up again. And we'll have to find where that next put point is.
Yeah, we're about 20 seconds out from data, everybody. I'm going to be keeping up the 30-year this morning, just again, because I do think this is the market to be watching as data comes out right now. As Shai has put, we don't expect it to be too broadly market moving. But again, keep an eye on the bond market initially. I think we'll see how that impacts equities.
So Empire State Manufacturing came in better than expected, still negative at minus 8.1. Generally mean they're seeing better business conditions than they did in the prior month, which was minus 20. And then import price index was minus 0.1%. And export price index was flat month over month and up 2.5%, 2.4% year over year.
Markets didn't really move much.
Yeah,
If anything, bonds upticked very, very little here, just a few ticks on the bond market. Yeah, so we've only got you for a couple more minutes here, Craig. Any final thoughts as we lead into today's trading day?
I mean, I think for today, likely to see, I think today's going to be a slow day, provided that Trump doesn't decide to have a press conference or something. I don't know. I don't know if the the press secretary is giving a press conference today. She might be. There's a news briefing today, so Carolyn Levitt does something at 1:00, and if Trump has something to say, she may decide to say something. So we'll have to watch for that. VIX expiry is tomorrow morning at 8:30. 9:30, retail sales tomorrow at 8:30, and Powell speaks tomorrow. So after a likely quiet day today, tomorrow is another day that I think could be very interesting because the market's going to be looking for an update from Powell. They haven't heard from him since the Friday of payroll, so almost 2 weeks. Markets kind of got a little bit unwieldy since he last spoke, and I think people will want to hear some assurance from him that he's watching, which we know he is, but also that he's ready. He stands there ready to help when we need it. And what I see is the market that wants it now, right? The market wants him to do something now. The market always wants him to do something now. The market acts like a petulant child consistently, and wants the Fed to help him and hold their hand, particularly when the administration is not holding their hand, right? I mean, so I just don't think we're going to learn that from Powell tomorrow. I don't think he's going to give you that warm and fuzzy feeling like, don't worry, I got your back, like I'm ready to do something here. I think he's basically,
Totally.
and I don't think this is like a personality thing between him and Trump. And I know there's some back and forth there about whether or not he's going to be replaced and by who, and can he be replaced before his term is. I don't think it's that at all. I think it's just, this is the administration is causing the uncertainty. The administration needs to fix the uncertainty before we can act, because there's too many cross currents here with tariff policy, whether they'll be inflationary, whether they'll be deflationary, how big will they be, how much growth deterioration will we get versus not. The immigration policy in the U.S. has also kept the labor market incredibly tight, and that's not a policy that's going away anytime soon. So I don't think corporates are so willing to just abandon their labor force. If you believe, 6 months from now, this is all going to be cleared up. We're going to have tax cuts. We're going to have deregulation. We're going to have supply side reform. And 2026 is going to look a lot better. We're not going to lay anybody off. And so if we're not going to lay anybody off, then the Fed has no reason to get too concerned.
Exactly.
Right.
So I think that's the back and forth we're working with here. But tomorrow for Powell, I think is kind of no stress. But the market may not like that, right? And so now, and as the VIX is kind of reset lower again, and we'll continue, we'll be down in the mid 20s as opposed to in the mid 30s or mid 40s, wherever we were. We may start to grind back higher again. And as earnings season comes, I know some banks are out this morning. Next week we'll get some tech, and then the week after we get all the big tech. If Apple were to come out with a big miss, or if Microsoft, one of these big cap tech companies, then you start to say, okay, now we have an issue here, because earnings, which have been the kind of the stalwart for this bull market,
exactly,
are not. And I've seen the FactSet numbers, the earnings revisions have rolled over, negative cycle has begun, but we haven't seen the big companies really talk about it yet. And the banks so far, JP Morgan was good, but if we start to see some of that deterioration in the earnings expectation outlook, then I think we're in for a real tough setting here for the rest of the second quarter.
Yep, Craig, this was fantastic. We got to move on now, Shai. Craig, I mean, the first 30-something minutes this morning went by so fast, didn't it? This was so great having you in studio. It's great to know that you're down here in Naples, Florida with us. And so we can't wait to have you back. Everybody in chat, give Craig a follow, CES921 on Twitter. We'll put that link in there and check out what he's doing. He's a macro strategist at the Bears Trap Report, probably one of the longest standing letters that I know of. I've been in this industry a long time, and that Bears Traps report's been around a long time. Larry McDonald, you guys have done a phenomenal job. And so everybody give them a follow. And next up, everybody get ready for our guy, Jimmy Cagnina, who wasn't with us this morning, senior market strategist for this morning's Edge Report.
Hit that like button for Craig. That was good stuff. Let's check out the micro E-mini S&P right off the bat. Overnight, we had a range of approximately 230 points, about 2/3 of the 14-period ATR. So we got some room to go. We saw a lot of enthusiasm on the London Open this morning, and then nothing but selling ever since. Key JAX level 1 at 18,800 on the downside. That could serve as a target for the bears possibly. And then we have some put support, 0 DTE that is, at 18,700. And somewhere in the middle here is previous session's lows. Again, more targets on the downside. On the upside though, really, JAX 4 is pretty hefty up here at approximately 19,150. Then we have R1, then we have JAX 5. So there are targets on the upside as well. Right now, we're trying to make new lows very possibly. We're below this old area of support around we're right at the old area of support, 18,872. The E-mini S&P is looking really similar right now, and we have a situation where this is almost looking identical. London Open, got a little trade lift, and then everything fell apart since then. We have a high vol 0 DTE target at 54.10 on the downside. JAX 1 is at 5,400, not surprising. And just below that, around 53.90 is previous session's lows. For the bears, for the bulls, we do have JAX 4 up at 54.75, and then R1 all the way up at 54.90. The volume profile for both of these markets are immature. They're not ready for prime time yet. Point of control here in the E-mini S&P officially, though, is up at 45.50. Just moving over to gold. Gold is, again, same thing. We have a $23 range, relatively small range. We didn't quite get to JAX 2 at the bottom here, and that JAX 2 is around 32.25. The pivot's holding support right now. It's right next to the bottom of the London Open. You can see that purple line right there. And we're kind of trading in the value area pretty nicely right now. Point of control, approximately 32.38. Targets on the upside, though, we have call resistance at 32.50. And then we have R1 a little bit further up around 32.56. So there's room to grow here with just a $23 move high to low so far in gold futures. Let's move over to the 10-year note. The 10-year note is, we're kind of in a really nice volume profile right now. A lot of price happiness around 110 in 20 to 30 seconds right now. We have, again, the London Open. Well, after that, it was kind of enthusiastic, right? We kind of pierced previous sessions highs right there. We have some keen support. I'm sorry, resistance at 110.27.5 at the top side. High vol level of 110.16 is kind of framing the conversation on the bottom side. But right now we see some really nice volume profile. A lot of price happiness. Yields right now are approximately, let's just do a recheck here. 4.374, as Deli pointed out, not too bad, but we'd like to see that closer to 4.2 to normalize. Moving on to the Bitcoin, we have to talk about the Bitcoin right now. Nice rally overnight, continued during the London session. We didn't quite get R1. R1 is approximately 86,355. The volume profile needs to be, it'll mature a little bit more as we go through the day. There's some key fib levels on the right-hand side. Most notably, that 31.8% is right next to the lows of the London Open, and this is framing this is pretty good support so far for the Bitcoin. We'll see and actually the volume profile is a little bit of a P shape if you use your imagination. JAX 4 down at 85,000. Target on the downside, pivot 84,790, and then high vol level at 84,000 even. On the upside, JAX 2 is approximately not approximately. It's 86,750, and we have some serious call resistance up at 8,700. Now, one of the dailies I do want to show this morning, and hopefully I will get to talk to Tracy more about it on hot commodities. But this is platinum. Platinum on a daily chart this is a pretty significant rally here. I framed a fib just from the recent highs to the recent lows. We're tracking above that 50%. We're almost to 61.8%, which is pretty spot on with that 50 EMA, right? All the moving averages are arcing up here, the 8, the 21. This market's on the move. We're through this relatively long-term area of support, which was resistance for a hot minute, and now maybe it'll be support again. So platinum is definitely on the move. And then really quickly, some targets here. We got that Menthor Q one-day max up at 974, target for the bulls. R1 is right below that, 972 half. And on the downside, well, we got some JAX numbers. JAX 1 is at 960. Pivot is kind of framing the bottom of the conversation down here, if you use your imagination, 956 spot 2. And then JAX 2 is way down here at 950. That is your edge report. Back to you, Deli and Shai.
Jimmy, that was great. Appreciate it as always. My boy Pharm, he's got a hat on today. Good morning, Pharm.
Good morning. I'm mixing it up, Deli. Honestly, it might be a sign that I'm just going to go right back to bed after this because this looks sloppy. This looks really sloppy.
Oh, man, I tell you what, dude. I mean, it's funny. Like this morning, I was waking up and, as I always do, and I pull the phone and I'm looking at the markets and I'm going, oh, man, it's going to be a slow one today. You could just feel it. And I don't know how much you caught of that with Craig Shapiro this morning, but I thought that was great. Chat, light up that like button for him and for Pharm as well today. I thought that was really, really good. It was nice of Craig to come in this morning and spend some time with us in the studio and really just laying out the landscape of where we are. We know that, look, at pretty much everybody, I would say 99.99% of the people here following you and I and the people in chat are, mostly going to be short-term swing or technical traders, and there's not a lot of macro that goes into our thought process when we're entering or exiting. But it's about understanding market environment, Pharm, which you and I talk about every single day. And I thought Craig did a fantastic job, him and Shai, about laying out this macro environment because, as we talked about yesterday, from one day to the next, Pharm, these different market environments are where most traders get really caught up. And if you don't understand kind of, the business that we're in, right? I mean, markets, majority of the people outside of our world of day trading are looking at much bigger picture, right? And so understanding sentiment, understanding what's happening there is so important. I think we're at this unique time right now where we took the brunt of these big news headlines that have come out. The market has made its extreme moves for now. We get back to short-term technicals. And now you got to rein it in, adjust for what the market is right now, know some things that are coming up down the pipeline, and just get ready for business. And I mean, I don't know what you thought about what he had said or just about this environment in general right now.
Yeah, I wasn't familiar with Craig. I definitely immediately followed on X, so I definitely encourage that. I really enjoyed listening to most of that and did not mind at all if our section was cut short today. This is a perfect day for that because, again, this looks brutal. So, no, I really enjoyed that, and it is good to hear some of that perspective, just sort of broad coverage. And I do think as we get into earnings here, that is going to be key for a couple of quarters here, right? Because we've talked about the possibility of slowdown for, really 2 years, right? People were looking at it in 2023. We obviously had regional banks, we had issues there. It's kind of, waxed and waned in terms of, what recession risks are. And, recession is a risk to earnings, and earnings deceleration and decline is a risk of recession. So I think that's really what we're going to need to be paying attention to in these next couple of quarters to know, where the heck this thing's going for the rest of the year. So that was a great segment.
Yeah, no, definitely. And like we said, we've only got a little bit of time taken off of our stuff this morning. So let's just go right into the charts. And I'm going to start off with the 30-year bond. And I talked about this morning. And, some people are probably thinking Deli is trying to get everybody just to trade bonds or look at bonds. But I got to tell you, I've been watching the bond market for majority of my career, even as a super short-term scalper. I've always kept it up just because really the people that I learned from always looked up. We looked up at the board to see what the bond market was doing in the pits. And it's always been really as simple as if the bond market is moving quickly in any one direction, it's something to take note of, right? I mean, if the bond market is grinding and doing its thing day in, day out, and you understand it from what's happening on the bigger picture perspective with rates, that's one thing. But if the bond market starts to escalate in any one direction, everybody, I'm telling you, it's gonna feed into what happens in the equity markets. It just is, right? And so for me, right now, when I look at the bond market, the 30-year bond ZB, I look at the Bollinger Bands with that mouth opening wide like that, and to me, if we start going down, we're still in what I consider range expansion. Unlike what we think we see in equities right now, where the lows seem a bit far away to kind of really get any steam to get there within the next few sessions, although you never know, the bond market is still relatively, I think, close to where within a few sessions or less could be right back to those lows. And what does that mean for equities? So I keep looking at this and say, trend is bearish, watch it, watch for the speed of the move. 10-year notes this morning, just right back kind of in this range that we were talking about. Nothing exciting I'm seeing there at all in 10-year. More about the 30-year right now. When I go to look at what's happening in gold, because it's another market I'm watching, because if gold does start to escalate to the upside, I start to think about, okay, what's happening there? You and I talked about this on Q1, the first day of Q1, which felt like yesterday, right? We talked about what's happening for a theme going into the new quarter, right? Our markets, what are they buying? What are they selling? And it's as simple as that. Gold remains bid. It remains probably the most bid market out there that I watch. You've got macro and technical behind it. And if that move starts to accelerate to the upside, watch to see what it does, not only for day traders to potentially trade that market, which I see really only looking at long signals in that market for right now, based on my strategy. What does that do to the equities market? And just keep an eye on it, because as flows come into gold, you wonder what's going on elsewhere. And so I just like to keep an eye on it. Today I start with the NASDAQ, because NASDAQ 3 times in a row stopped right at that 21-day moving average, simple moving average, and I look at it and just go bang, 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 3 times in a row. Can't get above it. Excuse me. And I look at that and say, is it losing momentum again? This morning I wrote in my post, momentum is real. We had it to the downside. We had it back to the upside. It's now stalling. As fast as that switch turns on, as fast as that switch turns off. Adjust now. We are now in a market where I look at it and going, it's around crowded moving averages. Expect two-way tape. Short-term technicals are the focus. From the bigger picture stuff, I still think you're going to need momentum to push through. If we were to make new highs, I think it seems like a tall order right now to gain any steam up here in NASDAQ. But the NASDAQ is the one market that if it does start to take out the recent highs and gets above this 21-day moving average, which is 19,245, I think that could spur a decent rally across the board, and which would bleed into S&P. If it doesn't, it starts to drift lower, then I just think, more two-way tape. S&P can't even get to the 21-day moving average. Bollinger Bands still may remain really kind of wide with that mouth open. We're not quite in what I would consider range expansion. We're more in what I would consider contraction. And just two-way tape again. Short-term technicals are the key right now. All your short-term strategies, do your homework, believe in it. I think you could trade this tape in both directions right now. I don't think anyone has the upper hand. Watch the NASDAQ for the 21-day as the one thing that stood out to me for me today. If it does start to make a newer high, the NASDAQ is the one that looks like it has the best chance of rallying. So if it does go, watch to see how that flows into S&P. But when I look at S&P today, to me, it's like sideways, maybe even drift lower. I just don't see a lot, Pharm. It's like, for me, as somebody who takes, positions for a day or multi-days, this is just a no trade for me right now. It's about just waiting to see what happens next. That's what I've got for you this morning.
Yeah, I agree. The 21 has definitely been key on the NASDAQ, and I mean, really both, and particularly once the 21 EMA crossed down the 200 SMA. If you look back at, and I think we talked about this a week or two ago, I don't recall, but if you look back at 2022, when the 21 EMA crossed down the 200 SMA, good things didn't really happen. And it wasn't until after March of 2023 that the 21 EMA crossed back above the 200 SMA. So the bottom was in, but it kind of took some time to find that low and really firm up. The NASDAQ, given that, I was somewhat potentially interested in getting short, maybe today. I was thinking this yesterday. But looking at it this morning, I'm not really sure that I necessarily want to do that. But, I'll get into that. I want to see 930 is something I'm watching on NQ. I would like to see if sellers can make an attempt to expand range to the downside, take out yesterday's low, and then start capping 930s. Then maybe there's something. But, again, on this ES chart, if you imagine these candles, so 4-3, 4-4, 4-5, and you just combined them in what would be called candle math, right? So there's your range, 1 3-day candle, if you will. Everything else to the right of that is sitting inside. So we have gone nowhere. It's just a compound inside bar. So, and that's why yesterday I said, I'm really watching this 4-3 candle on RTH specifically to see if we can break and sustain. And that's going to get us, that's about where the 21 is anyways. And a breakout from a multi-day range that is sustained should find some legs. Of course, if we kind of look up here and get rejected, then that's not a fantastic look. But flipping over to your, weekly, the way that the profile is developing, again, we broke away from Friday's volume, and we talked about sort of filling in some of this here. And that's basically what we've done this week so far. We came down, we did get the gap fill. So we talked about that gap up, the 54.98 spot. And, we got the gap fill, but that was it, right? Sellers just kind of turned it off immediately and went home. So, to me, this is just, balance, chop, consolidation, range. There are not fantastic edges. I felt like coming into yesterday, we had some fantastic edges, within this range. But now it's sort of a situation where, either we're going to crack back, below yesterday's low, back into Friday's range, and we're going to see some traction lower, or we're looking to see sellers make an attempt to expand range lower. They fail, we can take it back the other way. And then similarly, if bulls come in and they want to lift this and they can't drag this thing, into last week's highs, we can potentially look to fade a move there. But if you just look at the volume and how thick it is here and how it is a relatively nice D-shaped, it's just balanced for now. So, where we had a few edges in here, and when I'll get to the 5, there's some potential edges that could form that looked good yesterday that don't look good now. I'm not super interested in engaging a whole lot in here at all. So I would really be looking for these, failures down here, failures up here, and then taking the other side of that. Drilling into the 5, we had that kind of 42 to 44 spot yesterday. I'm going to go ahead and leave that for today. I've added this 33 to 36, and I'm not convinced on this one. But if sellers do come in at the open and they make an attempt to expand range lower, then I feel like probably they're going to need to defend by these 30s to avoid getting wrecked after a potential failure. Certainly the 44 spot, I think, is still going to be relevant. You could call it 40 to 44. But for the most part, this is just, and again, looking back at how the week is developing, this is just a broad balance. You can call it 54.80s. We had an excursion above down to about 54.05, 54.08, kind of down here. And so I'm really looking to interact, way the hell away from the middle. So I plan, if we just open somewhere in the middle here, it's very unlikely I'm taking a trade. I would, again, I would like to see sellers make their attempt and see what they can get. They sold the open yesterday. That can't be necessarily a big bearish signal, right? We gapped up enormously, and, inventory was stretched very long. And so we talked about that profit taking coming in at the open. It did. We lost this 74 to 80 spot. We came down to, the 44 to 42. That was the IB low. rallied back up to those 74 to 80s. Finally, sellers broke it down, but they didn't get very far, right? They got gap fill like perfectly. And, then a big rally off of that. That just reeks of short-term money to me. When you get those perfect gap fills and then just a mega rally afterwards. So I don't think that there's a lot of big money doing a whole lot here. And until that changes, I'm not going to have any kind of conviction directionally. We're, again, inside that 3-day range that I pointed out. Everything is inside. Everything looks like consolidation, balance chop range. And so today is probably going to be one of those save 90 kind of days where, there's a certain platform for prop trading that choppy balance days that wreck everybody, new discount code offered. So it feels like one of those days today. So I'm, one trade for me probably, and that's going to be about it, I think.
Isn't it something how much we have to adjust from one day to the next in this market right now?
Yeah, it's pretty wild. I really thought we might develop some decent and clean edges yesterday, and then we just filled them in yesterday. So, again, we did have some clean edges. They worked very nicely yesterday, and then we just ended up filling them in with some volume, and it just wasn't as clean. You're constantly watching how the week is developing and how the profile is developing. We had, buyers attempt to expand range to the upside. That got rejected. Sellers took their shot. They got rejected. So that just tells you that, as you've been saying for a couple of days, just two-way tape, chop, balance, grind. And it's a perfect day for me to, wait for the first hour, see how the day establishes its profile. And I mean, one of my favorite trades on days where, there's just nothing doing is to wait for like an afternoon trade. If it shapes up as like a perfect balance day and we're not going anywhere, I'm not saying it's going to just because, of this, but if it does, I mean, those are some of the easiest to take reversion trades off of, right? If you get some kind of attempt at range expansion, below existing low a day or below value area low, and that fails, sellers don't really get anywhere, it's probably going to revert back to volume point of control. And I mean, maybe you can pick off in this environment, vol's still relatively elevated. It might be 10, 15 handles. So those are the kinds of things that I look for, is just sit on my hands and like wait for something that just kind of looks easy, where you just kind of point at it and you're like, yeah, okay, well, this is kind of, kindergarten stuff here. So it's trying to play around too much and get too fancy today just doesn't seem like it's going to work out very well to me.
So important to lean on your preparation, everybody, because if you know what you're looking for, it's what is going to breed patience, and day in, day out. Right now, as the market environment's shifting and we don't know what kind of headlines we're going to get, you just don't know when these opportunities are going to come. And so you really, really have to dig deep and believe in your preparation. So many traders will just come in, do their preparation, watch us do things, and when the market opens, all of a sudden they're clicking buttons. And, you can find yourself in just a whirlwind of pain in this type of market environment. From one day to the next, the shifts are just, everyone's chasing and just doing all these bad habit creations. And it's just right now, it's just believing your preparation. You know what you're seeing before the market opens on your charts. You know what you're looking for. Wait till the market gets to those areas and then execute with confidence. It's about being patient and then impatient when you get something. We've only got about a minute and a half left, Pharm. Anything specifically you're watching for out of this open? It looks like we're almost opening up kind of like right in the middle of the overnight range. Is there any kind of lead coming into this morning?
Yeah, exactly. Opening right up in the middle. So I think, I would like to see sellers take a shot at the open. On this recent swing low we had here, this was low of night to the tick exactly, with that, early evening low. And that to me looks like it's just begging to get swept. And so I would like to see, again, maybe sellers continue to defend this kind of 33 to 36 spot here. Maybe they can come in 42, 44-ish, drive this lower, clean up this, what would be a poor low, sweep into maybe these fives, which were really well bid yesterday after low of day. And it left, ended up leaving an excess low yesterday. So maybe clean up these lows, look below and fail at the overnight low that holds maybe, 5, even up to 10, 54.05, 54.10-ish. then I'll probably look to take that long back up to at least the 30s. And, because, again, back on the weekly, it's all just one big balance range chop. It's possible you can get runners all the way to the other side. So that's where, like, if I see something very specific, I'll go ahead and take that if it sets up very nicely. And hopefully sellers cooperate and come in and offer that. I don't see quite as clean of a trade, at the upper edge, but those 74 to 80s have been reasonably well offered. And so if we continue to see pops sold above, 54, 74 to 80-ish, then, maybe I'll look to take a short back down. So that's all I'm looking for today, Deli.
Got it. And everybody, I really suggest, following Pharm for what he's doing with volume profile tools. I think it's so helpful for traders to understand what's happening beyond just your candlesticks or your bar charts. And I love getting that perspective from Pharm every day. As usual, you can follow him here on the NinjaTrader Network Monday through Thursday. He's on with me roughly 8:30 to 9 Eastern. Of course, follow him on Twitter, which will always have his link in there. And check out what he's doing with his Substack. As I always say, one of the hardest working guys in the biz. Pharm, we both have black on today. We look good in black, man. We do. We got the black backgrounds, the black shirts. I mean, we look good, man. For a couple of are you Gen X like me?
I guess so.
Or
probably.
You,
I'm 42. I'm kind of like right there on the borderline. So whatever that kind of categorizes me at. So yeah.
All right, man. I love
appreciate
it. I love our morning sessions together. Everybody, hit the like button for Pharm. Thank you so much, Pharm. I will see you tomorrow.
We'll see you.
All right, everybody. Next up, as usual, Tanya Army. Hit that like button. We got our girl Tanya in here. Tanya, good morning.
Good morning, Anthony. How are you?
I'm doing good. I have to start off with the vlog. I was here late yesterday in the studio. I was here till like 7:30 plus, and all of a sudden I'm sitting there and I'm going through YouTube and I'm going through. A lot of times I like to go back and check your stream. I saw that Kane had recently put out something funny. It was like a coffee and a chat. Why you might suck at. Yeah, I thought that was pretty cool. I didn't watch it yet, but I have it on my list. And then I saw your vlog, and I'm like, I have to tune into the vlog. Tell everybody about what you just put on your YouTube channel. I thought it was fun. I caught the first like 10 minutes of it, and then I had to go home, but it was really fun.
Yeah, it was good. Well, I just showed up my behind the scenes of my little trip down to Naples. The first half is the botanical gardens, which was really amazing. It was humongous. And then the second half shows like the behind the scenes actually from NinjaTrader. You were towards the end, you're actually featured in the vlog. And we show a little bit of the studio and a little bit of hotel room tour, and just like just talking about trading and life. And it's funny how, looking back at that vlog, I'm talking about how sizing smaller and I'm anticipating smaller ranges before FOMC, and now it's a totally different story. And it's funny how quickly the tape changes. So
Yeah, and so that's what we're going to talk about this morning as we get into talking about what you're looking at coming into the session today. Tanya, pretty incredible how much changes in such a short period of time. I like to start off every day with a little bit of mindset with you. Just what's the mindset coming into today as volatility has dropped, volume has dropped. We're really in a very different environment than we were not only just from last week, from just the last couple of sessions. So what's the mindset coming into today?
yeah, so the mindset is like don't get too greedy with my trades and such. Like I think yesterday I had to adjust in the morning where I ended up just taking partials at the last swing high and then, moved my stop more aggressively, and that ended up being the good decision there because we didn't have more follow-up through to upside. I basically took partials at the local high. And then when I got stopped out at in profit at the last swing low, that's where the market shifted. And then we did have a decent actual drop to fill in the rest of the overnight gap. So it's like, don't get married too much to one direction because like we've been saying, it's a two-way tape. And it's kind of, a lot of adjusting is necessary. So also like maybe I'll take a stop out today or a couple more stop outs than usual just to figure out what the tape is. Like and that's like a normal thing to adjust to a new environment. If you're going to take a couple more losses than usual, that's okay if you just size accordingly and you just stick with your regular strategy. You're not changing anything. So just sticking to the process and staying true to your plan. And yeah, it's the same thing every day and never changes. So not really panicking or changing anything. And just trusting yourself, I think, is like such a big part of it, right? Like being confident in yourself and trusting.
Yeah, and that's a testament as to why you've grown your YouTube channel as much as you have, your success as a trader, your maturity as a trader at really an early age. And I love it. And I look forward to these conversations every morning. Take us through the technical side of things now. What are you looking at coming into today?
Great. So like as always, I start with the daily chart. And well, yesterday we did fill in this this new week opening gap completely by the end of the session, by the end of the morning. So, and now we're in an inside day of yesterday. So it's not looking very directional at the moment, right? So let's look back down and yeah, like it's like, okay, when all my points of interest are hit, I know that me and many others yesterday, you guys, we were bullish, and I said, oh, that's when things can get complicated when too many people are bullish, and it was just a slow grind up to the upside. And ended up making money, which is good, and being overall wrong in the general direction of the day, but still making money on this move up during this time, which is crazy. It's just fun. And yeah, like this is kind of tough because this is a nice little downwick candle here. If I go to, first I want to go to the 4-hour. There's a nice, like, if we filled this gap and it's kind of like, okay, the market just needs to decide on a direction and it's not much direction we can pay. When that happens, we can just ping pong. Like we have this 4-hour FEG here, which I don't really love actually. Because it's in a, when I like mark out the swing high to swing low here, just like intraday from here to here. Yeah, this is in a discount, so I don't really care too much about that. Meaning it's below 50%. Okay, so I go to the hourly. Yeah, we just we filled it really nicely on ES, pretty perfectly on NQ. NQ tends to shade outside the lines more than ES does. So you can see that here with like with the opening and close here, right? Like we shaded outside the lines. And like I said earlier here, I don't really care too much. Some people might be putting a lot more emphasis on this gap here. Let me see from here to here. Yeah, this is a large gap on the hourly actually. Now we went from the 4-hour to the 1-hour. And well, I'm not looking at it as such a strong point of interest because I'm not like particularly bearish today. And also most of this gap is in a discount below 50% of this leg up. So we already filled it actually all the way to the upside. We completely filled it here pretty much before the close yesterday during the afternoon. And we rejected. We made a swing high here. So if we're bearish, we shouldn't be breaking above this swing high. So I'll have this marked out. So this is an intermediate term high because it completely filled in this gap, this fair value gap on the upside on this one that I just had marked out. So and you can see that this made a lower high afterwards. So if we're bearish, like we shouldn't break this to the upside. Same thing kind of if we're bullish, like we shouldn't really break this to the downside. So I'm kind of just marking out these ranges here. And like seems like we've been just ranging between these 2 points actually. Let me delete this on NASDAQ, and I don't really love it, the structure at the moment, because there's like we're talking about, we're an inside day from yesterday. So I'm marking out yesterday's low here, which completely, made a swing low within this new week opening gap. So that's an intermediate term low, and this is an intermediate term high. And we did make lower highs, both on ES and higher lows after it. So really we are ranging, and it's not really crazy about this environment, because I'm not just going to guess the direction. And here it's like basically 50-50. I'm coming in with no bias, because of the fact that we completely filled these gaps. And so basically, if we break above this high, yeah, I would be looking for more upside. I mean, like just like yesterday, I was looking for last week's high, right, as buy side. That being said, the more that we stay within this range, the less likely that's going to end up happening. So not even, yeah, this buy side, and then I even wanted more, I remember. But yeah, all the way up here would be my target, like this last week's high. If we break that intermediate term high I talked about there. So then the next stop would pretty much be this high. Oops.
Chat today, Tanya, 37% bullish, 28% bearish, 35% neutral. Everyone, please vote in a poll. We got 325 votes so far today.
Nice.
Pretty even. Pretty even. A little more
Yeah,
bullish. A little more.
yeah,
Much more.
a little more, but I would say chat is generally more bullish most days, which is smart because, most of the time the market historically goes up. But yeah, so this is when I go look to the 4-hour, right, and then I see we haven't really broken a swing low or swing high recently with a displacement. It's pretty much a rangy, but like from where I was talking about from last week, it does seem like on the overall larger picture to me that we are bullish, and we are potentially heading towards this high here in the coming days and weeks. Just simply looking at the 4-hour, we had this break of structure here on the 4-hour. This is a nice displacement. And then where we retraced, we did retrace nicely into 50%. And we wicked this area, and that's pretty strong. And now, we left a new week opening gap up, nice gap up, and it's been holding. So as long as we hold, this low here, this gap up, we're continuing this this bullish order flow back up to last week highs and back up to here. So there's two things that you could do is that some people might be very, confident in that and just long within here and have a stop here. And that's totally fine. And some people might want to wait for, more confirmation, which would be, breaking above that high that we talked about here. This intermediate term high for ES and this one for NQ. So if I was like swinging, maybe I would be long, but intraday I'd like to just wait for more confirmation always, because you never know if it's just going to be a choppy day, range bound day. That's totally possible for today. We are just still within yesterday's range, and I've seen days where we can like we said, the volatility has dried up. And that means there's smaller ranges now. We don't know what a small range nowadays is because, well, yesterday's small range, the whole day was like 500 points, right? So in comparison, yeah, that's small to what we've had. Yeah, 517 points about. But that's still very workable. We can definitely find trades if we're very picky. So basically the theme of the day for me is to be more picky actually than usual, because when you're dealing with ranges like this, it's like it's like more likely to not work out because you're not dealing with such higher points of interest, like a daily point of interest where, oh, maybe we sweep you sweep a low, you get a daily low or a weekly low, and then that's like much stronger versus a session low. Like yesterday, we swept London low, right? And then that's where I went for the longs. And it ended up working out, but it was a very lethargic move back up, and then we dropped, right? So you can still make money if you're wrong on the overall sense of direction. If you just have the mindset like, okay, I just want to catch a piece of the pie, and I'm not trying to be a hero today, and I'm just trying to be like technical. So that's my mindset. And yeah, what do you think about that, Deli?
Yeah, I think that's spot on. I mean, I've been talking about it this morning. I mean, short-term technicals are the way to be right now. It's so funny. Remember, Tanya, last week we were looking at weekly, monthly, even quarterly levels. We were talking about stuff that
Yes.
Kane had up the quarterly chart. Pharm had been doing it, and now we're back to like, stay more in the short-term charts,
Mm-hmm.
and make that adjustment. I mean, that's why we're here every morning to help people make the adjustment and understand the environment. As usual, it's great to have you here this morning. I know you've got your stream. Great stream yesterday. We also broke a record for most people in the session at one time. It was like almost 2,200, which was awesome. So give Tanya the big thumbs up. Hit the like button. Clear, concise, confident every single morning with us, Monday through Thursday from 9 to 9:15, and of course her full sessions on Monday. Tanya, thank you so much, and have a great trading day.
Thank you so much. Have a good one.
All right, next up, there he is. He's got the Apteros hit on today, ladies and gentlemen. The edge
Hey, buddy.
is in the edges.
In the middle.
Good morning,
I
my
like to diddle
brother.
in the middle.
What's up?
That's my MO. Man.
So,
other than
I want to
other than having
spend.
been sick as a dog for 4 days, life is good. How about yourself, man?
Oh man, I'm sorry to hear that, my brother. Well, I appreciate you being here with us today. I know the audience loves having you. We get a chant for Merritt at least once or twice every day when you're not here. To bring Merritt back. We want more of Merritt, and so we appreciate you being here. It's been absolutely fantastic having you here on the network on Tuesdays. But I want to spend just a minute with you, just a quick mindset, a couple of things. Number one, we talked about markets changing environments from one day to the next. I mean, it's pretty extreme changes too. And so I know that you're all about preparation and, you're always hyper-focused on what it is that you're trying to do. Talk to us about how potentially, if there is any sort of mindset changes or anything within little tweaks that you make within your preparation, understanding how we go from extreme levels of volatility to where, we're still volatile now, but it's obviously dramatically different.
Yeah, well, when things go as dramatically volatile as they did, that's just unsustainable. That's not, we're going to go dramatically the other way. And this is the nature of markets. Markets spend time balancing, then there's price expansion, there's volatility cycles. This is markets. Markets are constantly in a state of flux, right? So, yes, we've seen ranges come back down, NQ's not moving 2,500 points a day. We don't need that to have some really nice intraday trades or swing trades or anything else. So I don't see the, let's call it, return to some semblance of normalcy as any type of thing to be standoffish about or to be way very, very reserved or more patient than normal. We always want to be tremendously patient for our trades and let them come to us. I'm not seeing anything in conditions that are telling me to not touch things. So
Last thing before we get to the charts, not feeling well, coming off of, your record, day. You've had so much going on in your life and about constantly, resetting yourself every morning in the session. What's the thought process on that and how do you handle that?
fantastic question. For me, there are a couple degrees of categories I might put myself in coming into each trade. And can we talk about the Masters in a little bit, man? Anyways, there's a couple categories I'll put myself in. One is you are too sick, too emotionally upset, too tired, whatever it is, right? To trade, and therefore your hands off. You don't even do a prep or anything because you're just not that guy, pal. That's not me today. I've had like 102-degree fever for 4 days, but I'm coming out of it. I don't have a fever now. I just feel a little banged up. So I'm going to be in the next category for me, which is, hey, let's take it slow. We're not going to try to come in and hyper scalp everything and be a hero and do all this stuff. I'm going to be letting the trades come to me. I'm currently in a trade. It was just a good trade, and I'm probably just going to be sitting here milking this thing and seeing if I can get lucky and what's going to happen. But I'm not going to be overly active. I'm not going to be doing a bunch today because I know that my everything, my biology, my chemistry, my psychology, everything's going to be in a diminished, weakened state here today. I'm not at my best. So I am going to need to not deplete myself and really allow myself to take a few shots here and there. And again, this is not due to, several of your guests have been talking about market conditions and they're not really seeing anything. And this is a drab conditions. I really don't agree with that. I do think that this market is in a very logical behavior and what we're seeing right now. But for me, it's about the self prep. Too many traders, they just want to go straight to the charts, straight to clicking buttons. Every day you must do a self prep. You must look inward. You must say, am I underconfident? Am I overconfident? Am I sick? What's going on? How should I approach the day? So you either need to be hands off, no trades. You need to be, I might take a trade. I might do nothing, but I'm going to be super selective because I'm depleted for whatever reason. Or you might be normal day. Let's get after it, balls to the wall.
Well, you wanted to talk about the Masters. You're in a trade. Here's what we do. Maybe tell us quickly what your trade is. Then you and I will close out with a couple of Masters thoughts because I do have a couple.
Yeah,
of
well,
them.
I think
so
there's
talk
a
to us
lot
about
of
what
stuff
trade
we
you're
can.
in right now.
Yeah, man, I think there's a lot of stuff. Like I could do a webinar. I feel like on the Masters, and it was one of the biggest watched televised sporting events in the past 7 years. It's a big deal. So anyways, the trade, it's from kind of an edge, right? It's wicking through some of these kind of weak looking lows right here in the overnight session. It did not go get the absolute kind of lows down here, but it didn't need to. You saw kind of a little bit of capitulatory selling into new lows, and they just got trapped there right around when news was kind of coming out. No big deal. Ran some stops. I saw that on the tape. I saw that across some higher time frames. You see kind of like this level from the past 2 days in terms of this guy right here, right? Edge of this profile and the lower edge of this profile right here. So we just kind of grabbed that area right there here today. This is pit session only, so we're not seeing the action. But that's what this was right here. So that's why I'm in from there. Pretty simple. Also, if we go up here on the weekly, this is a little grab right there. Beautiful off that lower one standard deviation. These puppies right here are looking vulnerable, so I'm looking for us to go and just it's kind of a mean reversion play, but it's also because look, whether something's trending or mean reversion depends on who you're asking on what time frame. But and I'll get more into this after you hop off or whatever. I know, but this is a market where we put in some balance, right, for a handful of days. We broke. We retested and confirmed leaving that balance, and now we're kind of continuing. And so to me, I think I hear a lot of people really overcomplicating this right now. And so I'm just trying to keep things simple and position with and going with what is, as I like to put it.
Yeah, I think the main thing that when we look at in the morning stuff is like when you zoom out a little bit, I think it does get a little blurrier. But when you hone in more on what the days are, I think that short-term technicals, as I said this morning, are the place to be. I mean, you don't need to look at those big picture levels as much right now because I think that the short-term stuff, shorter term, is the place to put your head right now and to look at it. And you can see that in your stuff. I agree that there's still opportunity, a lot of opportunity for the short-term day traders right now. I think that just over the course of the last couple of days, there's not one dominant side of the market. And I think that's the biggest shift. I think you could trade it long, you could trade it short. And more I look at it from what you have and other people, it is starting to look like it is trying to, go back to this firmness that we had in the tape before. It's pretty incredible how weak a tape could get and how firm it can get in such a short period of time. But that's what we have, and that's why I think staying on the short-term side of stuff is really important right now. But before I go, I'm sure everyone wants to hear. You and I are big golfers. What were your initial thoughts on the Masters?
Where to begin? And look, I'll be the first to admit that I haven't. I've had my ebbs and flows with being a Rory fan or not. I think that he turned me off to him a little bit. He's obviously a tremendous champion. He's a tremendous golfer. He's a tremendous competitor. His story from his humble beginnings, his parents working to support. I mean, just tremendous. Everything's fantastic. He turned me off a bit with the whole live stuff, and I thought he was acting a little bit like a baby with some of that, here and there. But so with all that aside, it's not really about whether Roy's your guy that you're rooting for or not. Did his round go perfectly?
Not at all.
Not even close. In fact, you could say that he may have choked at times. He may have let the moment get to him. He may have made some critical mistakes. And I just was sitting there, sweating under a blanket watching the Masters. And I couldn't help but think how much like pro trading, like consistently profitable trading, that round was, and that he ended up on top at the end of that after making such mistakes. And I think that people get this idea, whether it's pro sports, especially with regard to trading and making that turn and becoming consistently profitable, they just think it's this thing where you become this Buddhist monk and this Zen master and you don't make any mistakes and trading is easy and everything's just like you're just minting money day after day. But it's more like Rory's round there. You screw up, you make mistakes, and it's how good are you at mentally resetting? How good are you at being able to get to the point before you put another trade on to where you say the next shot is more important than the last mistake? To me, that's what the Masters came down to, man, and that's what good trading is about.
No, you nailed it. I couldn't have said it any better. He kept himself in contention the whole time amidst all the mistakes. He was always near the top of the leaderboard, recovered after mental mistakes, got back in, honed in, and probably saw one of the best shots I've ever seen with that draw that he hit around the trees on 15 was incredible.
Yeah.
But then, you come in and he misses a 3.5 footer, and it's just like, how do you go from that to that to that to that? And I thought it was spectacular. I feel the same way about Rory over the years. I've always kind of felt like, he's become less personable, I think was the biggest thing for me, where I like Bryson has become like this, big stage kind of guy. And I do enjoy watching Bryson. I don't watch Live really that much, but I watch him on YouTube. And so, I do have a kind of a little bit of a love for Bryson now. I think he's grown on me.
I know.
But, I'm happy for Rory. And I think exactly what you said is so important. And I know we will have more conversations on this because I think that there was so much to learn from that. But, yeah, that was great. I mean, you just nailed it, Merritt. I think everybody here, if you didn't watch the Masters, can relate to what Merritt just said and how that relates to trading. And so, yeah, man. Well, I'm glad you're here today. I'm glad you're feeling better. Appreciate you,
Yeah,
of
buddy.
course, as
Thank you.
always, my brother. Make sure you guys hit the like button for Merritt. And he won't say this, but he's one of the people where you have to go and follow him on Twitter and go check out what he's doing on Apteros. He's just a good guy in this space. Go learn more about what he's doing following today's stream. Merritt, I hand the keys over to you. I'll see you, my brother.
All right, brother. Take care. Speaking of good guys, y'all, Anthony Crudele is just, he's the kind of guy who he's just going to give you the shirt off his back to help you and do whatever he can. And if you want to give a like to the channel, give it for him, not for me. I really love that guy. Okay. Opening bell. We've secured a really good trade location. A ton of selling just hit the tape. You'll see this down delta candle here. But there's a passive buyer propping it up. I might scale, excuse me. I might scale out of some of this if we have traversed the full -1 standard deviation where my trade location was up to the +1. So it's a fantastic spot to take some off here. So if they start to drop it, so far that passive buyer holding it, and as I mentioned earlier, those juicy little stops up here through 19050s, some of these kind of overnight highs there. So I have no idea what's going to happen here around the opening volatility. I never know what's going to happen. All I can do is find where risk reward is skewed in my favor, where NADRO, my methodology, tells me it is, and manage risk. That's all I know how to do. Could toss out a limit order out here. See if we get a little quick spike up into here. Getting towards the +2 standard deviation intraday here, so it's tough going. That concept I've talked to you guys about of energy requires a lot of energy to keep this thing going higher directly right now. That may have been the capitulation right there, so I might need to I apologize for the coughing, guys. So I'm thinking that was the high right there. It anti-one ticked us. So we'll take the scale, cancel that order. That's funny. One thing I would like to say, and I appreciate you guys, love the chat. I appreciate y'all supporting, being here, supporting me. But let's make sure that we are not disrespecting anyone else. Look, if I'm your favorite person you watch here, that's fantastic. But let's not disrespect anybody else. There's a lot of really, really fantastic people giving their very best on this stream as well. Thanks, everyone. Looks like several of you were in a similar position. Look, I just don't understand the almost confusion or lack of clarity right now from a lot of people out there in markets. I do not understand it. Let's just look at this big picture a little bit. So, to me, April 7th here, we put in this really nice distribution. This day, we try to kind of come out of it on the 8th, but we end up coming in and look at what we do. We put in another overlapping distribution. And then prior to the big ramp up, we put in another one. So that's the line in the sand, guys. That is the balance of the market. If you like to use profiling, then there it is. And so from there, okay, kind of thin, nothing really going on there. Okay, a little bit of balancing that starts to put in right here, a little bit of overlapping here with an afternoon that essentially tries to break it, which is bullish. So look, we've got another zone. So I'm going to connect them, right? Because they're one area. It's important. It's not just levels. These are actual areas that really, really matter as one unit, a top and a bottom of kind of a value. And so yesterday, couldn't even get back below this prior area, which had broken out of this guy right here. So theoretically, you have a balance area and you have a break from it. You spend some time digesting that kind of thing, and then you put in a balance area. And then you have a little break from it. And then here we are, So if you want to be short, here's a really good line in the sand for you. If you want to be buying puts and really getting short, here's a good line in the sand for you, right? But there's other ways to trade it. It doesn't just have to be that. This is obviously, again, if we accept below here, this is going to be a bearish line in the sand up until this point, right? But also you could trade the breakout of that balance right here, right? If you get that kind of trade, that's a beautiful little short opportunity. And then as I mentioned, this one right here is beautiful. And then you could also do the bottom edge of it, right? So 4 different potential trade locations. But as I said, the words that I love to say, talking with Crudele earlier, I'm just trading what is. Remember me saying that? Go look at the recording. I'm just trading what is. I'm not trying to say I think the market's going to go down. I think it's going to go up. It's telling me that we're value migrating higher. We're rejecting areas. We are retesting key balance areas and confirming that the buyers are in control and leaving there. So it's not a guessing game. It's not something where, I'm trying to anticipate moves or look into a crystal ball. To me, it's very, very straightforward right now. Doesn't mean that it's easy, as often things are in trading, right? Simple, but not easy. I can see it just in the price action bars now, Deli, but only after years and years and years of volume profile work. that I can kind of look at now a price chart, and I kind of know what the profiles look like. Now, there's always surprises. There's volume in areas where you wouldn't anticipate it. I tend to be more on the market profile side of things, so there's no surprises there because it's just time at price. So, but yes, you do not get that perspective without first using the profiles. I think a lot of modern traders coming over from the crypto world, coming over from having just traded on Robinhood, those type of things, kind of just stepping into this, let's call it a more serious endeavor with their trading. I think a lot of them have kind of a bad taste in their mouth when they, and rightfully so, honestly, it's a shame. Because of some of the things that they come across with volume profile and the way people make it seem like it's some magic indicator and things like that. Guys, there's only 3 pieces of data in markets. That's all there is: price, time, and volume. Every indicator, every chart type, anything in this world that you could code up or plot or chart or whatever comes from those 3 points. It is a derivation of the time and sales window of every single trade that comes through. It's just a matter of how granular you're looking. Footprint charts, volume profile, market profile, VWAP, everything is just some derivation of price, time, and volume. Profiling is just a nice way to, rather than just look at volume on the x-axis, how much volume traded for this bar, it's just simply looking at it on the y-axis. How much was traded at these prices? Yes, Michael, one of my really good students over the past couple months is saying that I'm forgetting about the moon indicator. Yes, I totally blanked on that one. My bad. So a couple questions about I feel like, could you give the exact time you entered this trade, what you were looking at to enter? Well, you can clearly see where I got in. We could zoom in and get a little granular for you. Turn on the fills so you can see. So there it is, just as I described earlier. We ran some stops. Delta was kind of pressing firmly into new lows, and everything kind of snapped back. One of the things I teach traders of about a dozen skills. So we just started a new AGM class, Advanced Group Mentoring. I used to mentor anybody who would sign up and pay for it. I don't do that anymore. I'm not just going to mentor somebody off the street. I only mentor people who trade NADRO or scalp like I teach it, because that's the best value I can add, is to people who are trying to do something that I'm actually an expert in to help them do. I totally forget where I'm going with this. A little brain fog today. Where was I going with that? Anyways, so little stop run. It's the edge of the current intraday developing value. It's the edge of the weekly value. It's the edge of the upper distribution from 2 days ago, the lower distribution from from yesterday. It's a good trade location. Trade location is one of the best risk management tools out there. I love this name. I don't know. Hopefully, it doesn't mean anything bad. El dueño del perro de los Simpsons. I don't know what that means, but I love it. Dueño. That's not dream, is it? Dueño. I'm probably saying like the worst, the dirtiest word ever. I don't know that word. Or is it sueño? What's dream? Owner. What's the Spanish word for dream? Is it sueño? It is sueño. Okay, I wasn't far off. Okay. The owner of the dog from Simpsons. You win the award, sir or ma'am, for the best YouTube handle of the day. Perrito. Okay. Good morning, Leo. John says, "What's NADRO?" Real quick, this is going to be repetitive for many of you who follow me. N is narrative. What's the trade idea? We use all kinds of higher time frame contextual charts to frame potential clarity in terms of what the market's trying to do. That's the narrative. What's the story unfolding? Where's the market been? Where it's trying to get to? That's how we come up with the directional bias. For years, instead of just talk the talk and saying that the stuff was good, I put out what we call the DMI, the Daily Market Insight, pure just narrative, lines in the sand, whether we were bullish or bearish or neutral. You can go look at years and years of those to decide if it's any good or not. Actually had a bunch of people passing the tryouts who didn't know how to do that narrative work. And so, guys, in your trading, never, ever, ever use anything that you don't know all the math to, that you don't know everything under the hood to. Otherwise, if whatever provider or whatever that is gets hit by a bus or something, you have no job security. You don't own the edge anymore. You have to own your edge. So don't ever use just some magic black box thing that you don't know the math to. You have to know it and understand it so that you can own it and take it and carry it and use it and build a career off of it and adapt and change and understand when it's falling apart and all those things that we have to do. So anyways, I'll get back to I'll do a quick finish up of this point. We'll take some more questions. In is the narrative, the trade idea, the directional bias, the risk reward asymmetry. A is acceptance. Remember all those scroll back and rewind this. Remember me showing those short scenarios based on those main volume distributions from recent trade? Those would be, notice how I didn't just say, oh, look, we got a tick below this level, short it. I said, no, in order to short, we have to push well below it and then maybe get a pullback and retrace to then fade that. That's kind of the short version of acceptance and saying, hey, you don't just... a great way to get chopped up, and I came up with the concept of acceptance because I used to get really, really chopped up around levels. Oh, look, we're above yesterday's high. Oh, we're below yesterday's high. Oh, we're above it now. Chop, 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 chop. You really got to let the market breathe. Let it get through an area, and then and only then do we change our acceptance read. So N is narrative, A is acceptance. So what are we trading relative to those narrative reads? Are we above or below? Are we above our line in the sand enough to actually be bullish, and so on? D is the developing value area, which helps us time up short-term timing of trades, as you saw me being long right from here. It's from the lower edge of a rotational sideways Globex session. So I want to play a mean reversion play back towards VWAP. Nothing triggers me more than when I see people who say that they only trade with the slope of VWAP. More power to you. Don't take me wrong here. You could make money doing that. You could. But man, they're missing out on a lot of fun, a lot of good trades. Trading towards VWAP is such a powerful thing, rather than being so series of swing highs and swing lows in your favor to go with the trend as your friend type of, quite frankly, more beginner level trading. So that's the D, the developing value area. We have a couple ways of timing up actual shorter term entries. R is rhythm. Rhythm is really like getting a sense of if you put a certain zigzag indicator on a chart, right? It might show us these rotations. They might look something like this. This is probably not one, but I'll just finish it up and draw it. Right? That's kind of smoothing out the noise. Don't be so enthralled in every single hammer candle or whatever candle or blah, 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 engulfing or whatever. Zoom out. See the rhythm of the market. Get a sense of that ebb and flow. The market needs to breathe in and breathe out. So that's the R of NADRO. And the O is order flow. Order flow for stock NADRO trading is very useful, but mostly a tiebreaker type of tool. We have so much to focus on with great narratives and trade locations and lines in the sand and the timing them with the DVA and the rhythm and all this kind of stuff. For stock NADRO trading, order flow is really like if you're on the fence about something or pulling the whether to actually pull the trigger right now or whether wait for a little bit more of a stop run or things like that. Order flow is kind of that subtle helper, in my mind. Now, on the way I teach scalping, it's extremely centered around order flow. But stock NADRO trading, order flow is a little bit more of a tiebreaker type of tool. Why did I feel the overnight highs were vulnerable? Well, let's look at this 30-minute chart up here. Oh, I'm looking for my Zoom drawing tool. Look at this, guys. It's like a bull flag, right? Now, granted, we didn't just break out of there. No, we went and had our hoopty-doopty little stop run that we talked about, right? If a market comes in and looks like this into, let's just say, a low, that's a good low. If the market comes into the low and it does this, that's not a good low. This area is going to be vulnerable to stop runs through it, especially in a market like NQ, a little more thinner type of market, or especially when the VIX is elevated and markets are just a little more gyrating in general. All right, let's go take a look at our trade here. We'll pause going through questions for now. So anyways, you see this is not a great looking high here, so I expected to push through it. All right. We are up to yesterday's value area high. We do have fairly low volume on the session, low relative volume. But, you know, our vol is going to be low if you're running any type of 10-day, 20-day average because it's been insane. So the average is elevated. So anything back to what would be considered normal by any historical accounts is going to look like really dogged, below average volume. I won't claim to know what those numbers, I'm not a numbers guy. I won't claim to know what average numbers are for volume for NQ or any other market. What, like a million a day is normal on like something like the S&P? I really don't know. I've seen a couple questions about, you guys are like nervous with my stop. Everybody's like, "You gonna move that stop, bro?" Look, I mean, if something crazy happens and the market flashes down there, I'll be glad I have that stop. But honestly, I'll be plenty happy with a stop up in this region. I'm just really not worried about it. I believe one of the guys I've really enjoyed watching some of his streams when I can, Kane, who has a segment here on the NinjaTrader stream. He'll move those stops up very, I don't know if I wouldn't say if it's mechanical, but very process driven in his approach. And those stops will be at places where he really wants to kind of mechanically trail out of a position and book profits that way. I don't trade that way. So for me, I tend to leave stops in places where, hey, if we were to get down there, I really don't want to be in that position anymore. It's more of a emergency stop, things like that. However, for you guys, if I had to give you a recommendation and you're a newer trader, a not yet really successful trader, I'd recommend you do it more like Kane does. Give yourself that process, give yourself that clear out and put the order there and be done with it and manage it according to a process. What I'm trying to do is make decisions on the fly and with just some emergency stops in place and things like that. I'm not trying to pat myself on the back here. It is a higher level of discretion. And for newer traders, it's a higher level for things to go really, really wrong with your trading. I myself have to get back to more process-driven, more mechanical trading from time to time when there's a lot of selling will come out. So there you go. Great trade here. We traversed yesterday's value, found some sellers up here. As we've mentioned, really lackluster order flow, and I'm seeing this acceleration in the sellers here. We could easily see a pretty good counter rotation, a very rotational day here. So that'll be that. Nice little 7-8K scalp. There's so many ways that I recommend newer. And when I say newer, I don't really mean newer. I mean someone who hasn't made the turn yet. That's what when I say newer. There's so many ways that I recommend the trader trying to figure it out to behave and operate. And I feel that it's almost required for them to build that foundation, to build from, to continue to launch into upper and upper echelons of success in trading, rather than what I might do or what guys on my desk do. And I have people at all levels on my desk. Obviously, they're at some level of profitability, or else they wouldn't have made it on. But there's just a big difference. One of the classic examples I often go through is psychology. If you're going to go learn how to play tennis, your first lesson doesn't need to be all about psychology, and you don't need to lay down on a couch and tell somebody about your mommy, you know. You need to learn how to hold the tennis racket, right? You need to learn how to get really good at your hotkeys or clicking the buttons so that you don't have to think about execution. You need to get really good at knowing your platform. You need to get really good at NADRO, each of them individually, right? If you're kind of NADRO in your approach. Jeremy Silver says, I get out of my trades way too early. Well, that's because you're not trading according to a process for trade management. Sarona Hand says, me too. So guys, what can we do? What can you do? You can do what I did when I think back to probably the most pivotal moment in my trading. It was a low point. I'd had some failure in my trading. I had consistently not been able to capture, in terms of P&L, what I knew I was capable of, what my I don't want to use the word methodology or process because it wasn't that formed yet, but it was all floating around. I knew what it was capable of, and I was not capable of doing it. So this is going to be the most helpful thing you guys hear from me all day, based on what I'm seeing in the chat and how many people need help with this. And this is, you know, fast forward to more recently, I came up with the phrase, my process is a better trader than I am. Okay. So just hold that in your mind. Now let's go back to me in, you know, I don't know when this was, 2011 or something. I was not able to see the results that I knew was available. Sidebar. I'm the king of sidebars to the point where you can't even tell what my story is anymore. A lot of traders that I come across are delusional, unfortunately. They think they have a process with edge. They think they have a methodology with edge, but all they're doing is looking at places where the chart moved a lot and they're saying, see, that was a signal. And they're not looking at the other 27 signals that were losses. And they're saying, I just can't, it's just, I'm just in my own way and my psychology's messed up. And I have a really good system. A lot of people don't. And that is something that hits very, very personally with people, because you kind of develop these things and they become like your little child, you know, you're very attached to them. So stepping on some toes there, but I step on toes for a living to help people. So I was not able to capture what I was supposed to be able to capture. I was the problem. So I said, man, you either got to quit, right? Which we've all told ourselves many times, or you have to make a drastic change. And so I went into a simple trade management. I could do what essentially was narrative work to my heart's content. I could come up with whatever bias, whatever trade idea I wanted. And then I had very clear risk rules and I had very clear trade management rules. And I was not to deviate from those. And I went into market replay mode after coming up with these rules in my notebook, putting them in front of me. And I went to a random date. Back then, I believe I was just trading crude oil. And boom, in that market replay session, I was able to capture something that was far beyond any actual trading day that I'd been able to capture. And the very next day, I showed up. Obviously, a lot of self-prep, a lot of like, here we go. You've really got to to buckle down here. You're not going to make it if you can't go for more of a drastic change. And I did it. I had the best day that I'd ever had up to that point, which was nothing to write home about, but it's something to write freaking home about, if you get my drift. It was the biggest 24-hour gain, not gain in terms of P&L, development gain in my trading that there probably ever been. And I went to simplistic, rules-based trade management while giving myself discretion over the narrative idea and what trades I wanted to look for and get into. But then once I put them on, I was no longer in control. I had to let go of the steering wheel, as I like to call it. Too many traders white knuckle that steering wheel, and you end up just over managing everything. And if you over manage everything, that just leads to over trading. So all that story and my personal experience came from a couple people asking about getting out of trades too early. I think I've just given you a nice little template of a way that you might really make a drastic change, because it has to be that way. You can't just hope it gets better and yell at yourself in your journal and say, I'll do better. You got to make a drastic change, and you got to move more towards a process-driven, rules-based trade management. And let me know how it works out. So a lot of buying has come back into this market off of delta neutral. I still like our final exit. I believe it was somewhere around in here. Yeah. Great scale. We were one tick shy of literally top ticking that first scale, and then great exit here. And again, let's go back to a little bit of context. We got in at the lower edge of kind of weekly. We got out at the upper edge of weekly. We got in at this little notch here. I can't even tell because it's RTH only. But anyways, we kind of traversed and rotated up to the upper end, this lower volume area of yesterday's profile here. Obviously, it can push higher. We could just keep trending. But for me, I liked being positioned long, and I liked coming out when I saw some selling on the tape after we had traversed yesterday's value area. So right now, I just had like a self-aware moment. Super, super critical for you guys to develop that. I often refer to it as the ability to go from the micro to the macro. From zooming in, looking at order flow, making trade decisions, to zooming out. So what was my moment that I had just now? It was Merritt. Remember what category you're in today. So go back to when I was talking with Deli before he signed off. And obviously, I'm not in the best of health right now. So for me, I just reminded myself. It almost, you get so beat up in markets that I think it's almost like a warning bell that goes off in your head because you've made so many mistakes in the past. That's how it is for me. I just had a little warning bell that went off, and it said, Merritt, remember what category you're in today, which is I'm allowed to trade, but it's going to be very, very hands-off because, again, I will very easily be depleted today in terms of energy, mental capital, things like that. Ferris, the little girl passed it to Dada, and then Dada passed it to little boy. So he's down now. Buenos dias, Fernando. Villalobos. I'll be right back, guys. Just give me 1 second. All right. Thanks for your patience. Again, it seems like sellers kind of pile in once we peak. So definitely a little more resistance up here in this area where it makes sense that we run into some more sellers. All right, all right, all right. Yet another example of not a great looking high where we exited, and then they run the stops through it. Sellers slam it back. A little bit better looking of a high there. I'm not saying that's high of day, but that's what we're seeing. Well, hit sound being imbalanced up intraday is just a way to access trade ideas, right? When I went through Nadro earlier, it's just a way to time up your entries and tighten up your risk for accessing ideas. So just because it's imbalanced up doesn't mean that I'm just going to be shooting everything that moves, going long over and over, just because it's imbalanced up. I hope I hope there's somebody out there listening to this right now that's a light bulb moment for. There's a huge difference between an actual good trade idea and then the thing that you use to put the trade on, right? Oh, look out. Headline I'm seeing is around the EU is kind of saying like talks are not making much progress around tariffs. This is the down move I was looking for yesterday, says Crypto John. Wouldn't call this much of a down move yet. Might look like something on even the short-term chart here, but just go over here to this 30-minute chart. It's just nothing significant. Let's see. Somebody says someone else had a great question. Firmament. Merritt, any advice for developing a pod or support network? Where do lone traders go to find other people with similar styles, motivation, level, etc.? Look, I'm I don't want to constantly sound like I'm on this stream just selling you hard on Apteros or Nadro or any of those kind of things. I'm genuinely just trying to speak the truth here and help. It's tough. Apteros is a very kind of specialized place in terms of our education. And you mentioned something. Where do lone traders go to find other people with similar styles, motivation level, etc.? And you hit on it. You hit on it. You know what doesn't work? Taking 200 different traders who are trading different asset classes, different time frames. Half of them are using Fibonacci, half of them are using moon cycle, half of them are using Rinko, half of them are using Nadro. That's a lot of halves. That math doesn't quite math there. You get the point. A multitude of traders doing totally different things. Is there value that could be extracted in some ways? Yes, you can learn from people who are doing things differently. As Fat Fish is saying, it's total chaos. It literally is just a mess, and it becomes just an ego competition with trades callouts, because that's literally the only thing that makes sense to anybody is I'm long here. Look how good I am, right? So the Apteros community is only for Nadro traders or our new scalping course traders, and even them have separate places within our Discord. So it's a very focused place where at least you may not do it exactly the same, and you shouldn't, and no one does, because I teach frameworks-based ways of approaching markets, not buy here, sell here stuff. But it's a place where everyone speaks the same language in terms of markets. And it's a beautiful, beautiful thing. You can be held accountable for your decisions because people know what the principles are. They know what the best practices are and whether or not you're doing a good job of them or not. So there is just so much that comes from that. So look, Apteros is a place where we have it for those students. But if you don't have any interest in trading with Nadro or the way I teach scalping, then you just have to, I don't know. You just have to find those places and whatnot. Back when I was figuring out trading and whatnot, which we're all still figuring it out, aren't we? It was like forums and stuff. I don't think those are very good and healthy places anymore. Obviously, you can find your crowd, I think, on X. After sifting through the trash for a very long time, but it's tough. I can tell you, I've had Apteros for 5 years, and I think there's been 1 or 2 people that we've had to reprimand or remove from our community. It's just an incredible place, non-toxic, helpful, respectful people there. Just people that are very successful in life, people that are very serious about their craft of becoming a really good trader. So again, I touched on a lot of the way that you phrased the question because it's so perfectly phrased. It's because you need to find a pod that speaks the same language as you, and you also use the word like level of motivation or dedication or something. That really matters too. Kind of like this rotation here on the week selling, but I do not like the location in terms of middle of DVA and things like that. So I don't believe there is a setting on the cumulative delta. It's just, it is what it is. How old am I? 38. It's my understanding that TradingView does not actually offer actual unfiltered raw price, time, and volume, right? Tick data. So I don't believe that any form of delta, you have to have a sophisticated platform that gives you raw, unfiltered tick data, not just offers you tick charts. There's a difference. I've glanced at TradingView's price for whatever that premier package is or whatnot. Who do they think they are to charge that price for what Ninja, CQG, Sierra, you name it, all these platforms that offer real market data. What are they doing? I'm sure they're positioning themselves for some reason, but I certainly can't understand it. No, I don't think TradingView is glitchy. I don't think that's true. Yes. Yeah, I look at RTH VWAP every day. So I look at ETH and RTH. They both give their versions of the truth. Yeah, that's great. You can get a good deal on TradingView, but my point is that if you're actually trying to use order flow and whatnot, which not everybody does, that's fine. That's great. But if you are, you need a bit more power under the hood for your platform, which obviously NinjaTrader has. Has he made a trade yet? Look at the fills. We bought here, we scaled out here, we flattened there. Thoughts on automating strategies? It's complex. I've got some opinions. I don't know if I'm right about all of them, but I've got a pretty substantial level of experience in the industry. I've never really seen any staying power in a retail, fully automated, short-term trader. Being 100% systematized, quantitative, rules-based, coded up, turn it on and let it run and just make money. It's a very, very challenging thing to do. It's a very, very challenging thing to scale up and not ultimately become picked off by the other machines that are much better at doing these things. And so if you do have some edge for a while, it's fleeting. If just the concept of back testing, guys. Pretty much what every retail trader does is just kind of overly curve fit, recent data that they're testing on, um, until they find some combination of something that works. And I can tell you there will be no success in that. So it's tough. That's my opinion. It's really, really tough. Okay, so back to current markets here for a moment. Really nothing to pull me into this thing. I just really, really like what I did today. Secured a great trade location, took great exits. A little bit of a news headline brought us back into kind of VWAP middle area here. And yeah, I was saying there was kind of some weak sellers into this area, so could have reinitiated along, but nothing very compelling in this area here. It's just not a good trade location. Go back and look at the recording of this. And I talk about trade location being one of the best risk management tools that exists and things like that. So just not a good spot for risk here for me and the way I see markets. We've already taken, 80, 90% of the day's range with the trade that I had. So, and I'm under the weather, so I'm going to be more hands off than usual, not trying to just actively scalp this thing over and over. Candlesticks do not show order flow. It's wild how much I see people say things like that. And it's just so wrong. You can't see anything relating to order flow. The only thing that you might can see in a candlestick that relates to order flow would be if you watched it unfold live at the hard right edge of the chart. You could determine the speed of the tape just by seeing how frequently it's ticking up and ticking down. That's the only thing you could garner from candle charts. And I'm not biased, guys, on this. I'm not some order flow champion that goes around and tries to get everybody to use order flow, right? I came from a background of being pure naked price action trader myself. You cannot read order flow in price candles. You can't. So again, I'm just going to give a little bit of a read here. Sellers responded from Delta Neutral quite strongly, but price has not moved in a similar fashion. So what does that mean? Absorption. A lot of bids being slammed, but those resting bids not being eaten through as much as would be normal. So that's absorption. No, I'm not using the dome to see absorption. I'm using exactly what we're looking at right here that I just described. I do not use a dom. I have a bad habit of saying dome. Not as bad of a habit as Leo has, though. So here we see some of those trapped sellers starting to get a little squeezed out. VWAP. 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 Absorption is when you have one side of the tape trying really, really hard, aggressively selling in this case, and they're not getting resulting price movement. Usually when you have a lot of aggressive selling, price goes down. If you have a lot of aggressive selling and price doesn't go down very much, that is called absorption because those sellers are absorbed by passive buyers. All right, guys. Well, I think that is going to be it for me today. Thanks for being here with me. Thanks for watching me bear and grit it through the coughing and the wheezing. But we had a great trade today. I think today was a really good example of not being at your best, but knowing exactly when and where there's an opportunity for you, and then being really hands off with the management and letting things come to you and not trying to overdo anything. Hey, Jim.
Merritt, man, that was awesome, man. Next time I see you, you're buying cocktails.
Yes, sir. I look forward to hanging out in Charleston sometime.
Oh my God. Well, good job. Appreciate you being here this morning for sure.
Awesome. Take care, everybody. See y'all. Thanks, chat. Bye.
All right, all right. Whew. What a morning so far, huh? What a great cast of characters. Not characters, but traders. Oh boy. So let's kind of take a peek here at some markets here. We're going to have, in a little while, when we get to midday markets, we are going to have Fabio is going to be with us, and we are going to be talking Menthor Q gamma levels. We're going to look at the Menthor Q dashboard. It's going to be awesome. So hang tight for that. That's in about 15 minutes. I'm just going to pull up something real quick, and then we're going to go over some charts to kind of see what the heck is going on today. So bear with me while I just click a couple of buttons. And I'm almost with you. Actually, what I'm doing right now is I'm popping out the chat so I could say hi to everybody. Chat's been popped out. Phew. Yeah, hit that like button for Merritt, man. That was a great trade. Come on, you got to admit. Let's hit that. Let's hit those. Smash that like button for Merritt. There we go. Merritt Black. Appreciate that. Thomas Bolatao, good to see you, my friend. Longtime listener or part of our community, right? This is a community effort, and we appreciate everybody being here in the chat for sure. We appreciate everybody viewing at home. Boy, what a journey this has been. Fat Fish is in the house today. Chris Boxes. Chris, I love you, brother, man. I'm glad you're here. Oh man. All right. So let's just kind of go through we'll do a little bit of a early midday wrap up, and then when Fabio gets here, we'll hit the ground running with some levels, some important levels. Even the S&P 30-minute candle on the board right now. I'm going to go ahead and just kind of, what was the range today? I'm going to go low to high just to kind of see what the range is and think about it in terms of what the ATR is. 72. I have the right day on here. There's only 72 points so far. The daily 14 period ATR, 203 points. So again, kind of by that measure, we're range bound, right? So it's in the volume profile still not great from the session point of view. Literally, we have a point of control. It's decent, right? And not surprising, it's at that 50, 54, 50-ish level, right? 54, 51. A little bit of a volume node started to develop higher. A competing point of control, perhaps, but we're going to have to get a little bit more trade lift there as well. So that's kind of an interesting thing. I'm going to draw some rectangles here, though, because we do have a couple of sellers wicks at the top in the last. This is a 30-minute candle I'm using. So I'm going to go ahead and just do some rectangles here, do some rectangle work on the charts. Again, body of a candle is not closed up in here. We've wicked through it for sure, but we've kind of stalled. So I'm going to kind of define my area resistance starting at 54.67. Now, I know we wicked through it three times, but sellers keep coming back. Sellers keep pushing this thing back. So we're not getting that momentum, that continuation buying to get us up to R1 or even further than that. Let's see where 5,500 is. Pretty close to previous session's highs here. So that's kind of the story here. The session VWAP, right? And again, I define session VWAP as, it's anchored, right? It's always anchored, but it's anchored to the Globex open last night, right? Or the previous session, which that was Monday night. So I anchored it there. That's that white line that goes through. And in the interest of trying to make my charts look a little better, I added the first and standard deviation bands, but I didn't. I made the lines transparent, and I just put a shading in there. If it's too hard to see the shading, let me know. But that's kind of how I have it. On the downside, I mean, really, the downside is kind of framed a little bit by the initial balance low, 54.32 right now. And again, we're kind of trading right in the middle here. So, Zelly says Trump considers a pause on his auto tariffs. No, I'm sorry, so does Tracy. Boom, double whammy of news right there in the chat. That's awesome. So, yeah, even some of the news now is not driving this thing any higher. So it's kind of a nice pause. And just to kind of reflect, let's just reflect on a daily, and then we'll go to, this is an old Q score. Let me delete that. Sorry about that. It's called a remnant. I have remnants on my chart from yesteryear. So this is the daily candle. And, first thing I look at is, where is the 8 EMA? Are we trading below it? Are we trading above it, or are we trading through it? Right now, that 8 EMA we're trading above it right now. We have two baby candles back to back, right? These are two really baby candles. And if you judge today's candle by the wicks, then you'd say, well, this is an inside bar so far. If you judge today's candle just by the body, you'd say, well, this is a bullish engulfing candle. I'm going to go with inside bar for me. Again, small baby candle compared to all the others. Last time we saw a candle this small, let's go. Remember, we were at, what do we say, 72 handles? I mean, I can't even find one. I mean, here's one. Here's a little one. This might have been a holiday. I don't know. I mean, this was a pretty small high to low range right there. That was only 35. It must have been a holiday. 35 handles. I'm kidding. The midpoint of this big dominant benchmark candle, it's still the dominant benchmark candle. I know it was news driven for sure, but it's pretty close to this other benchmark candle that we saw here on April 4th. So that's kind of the midpoint level here. As long as we're trading above it, I'm not too terribly bearish. But once we start closing below it, then that's a warning sign. We're going to have some alerts. We're going to get some warnings. The alarms might go off. The alarms might go off. From a fib retracement point of view, and Tracy nailed this yesterday, right at that 50% retracement, right? That's where my area of resistance starts. That's that rectangle right there. Again, this is a longer term point of view, thinking about my bias. I like to set up my bias earlier in the day. And you could do that by going back to a weekly if you want. I have a weekly candle here. This is going to take a second to populate. I do want to show you this. This is the commitment of traders data that you could get. It's native on the NinjaTrader desktop platform. And I have the commitment of trader data. I know it's published on a Friday and it's data based on close of business on Tuesday. So one might say, well, it's a little bit lagged. But you could look at the trend, you could look at the transitions, and especially for the commodity markets, it's kind of important. So going back to bias, start with the bias, long-term bias. What are we looking at? And so I'll look at this weekly, and I'll kind of look at these fib retracements and other areas of interest. I have some rectangles here. This area of support, approximately 55,000 even, was a pretty good one. Right now we're about 38 we're more than that, right? We're more than 38.1% retraced on the upside. And then there's this kind of catastrophic level down here. This is like the doomsday support area, 41.31. Hopefully we don't get to that. But at any event, the commitment to traders data, though, this is published by the CFTC, and it only tracks large positions, right? Mostly institutional or even really large individuals, right? You have to report. It's a reporting requirement. Usually the FCM or the clearing firm helps you with that process, and then it gets into this report. They publish the report. They have since the end of time, and it gives you an idea of. It breaks it down into categories, right? So one category, I have two categories charted right here on this E-mini S&P weekly chart. We have the commercials. This is blue. Light blue line is what they call non-commercials, which is, you could call them large speculators, right? These are folks that are speculating. And then you have the users or the hedgers, right? This is the commercials, that red line, right? And usually they have opposite positions. Not always, but usually they have opposite positions. A hedger's protecting, a speculator's trying to profit, right? So it's a different kind of relationship. But again, in the commodities, it's a little bit more important than that. So in any event, it's easy. You just go to, you just put it on, add it as a panel on your chart. Easy peasy. So right now, this is kind of a nice picture if I'm thinking about a recovery. And this double bottom here was a really good double bottom here. Remember, we saw these lows back in April 12th of what year is that? And make sure it's 2024. It is 2024. And it was almost textbook perfect kind of double bottom. We kind of bounced back up against it right now as well. And of course, we're kind of waiting for news. So now my bias is like, I'm a little bit optimistic on my bias right now. Forget about all the news and all that stuff. That's going to also kind of mess up my bias a little bit. But from a technical point of view, that's where I'm at. Now, I also drew a anchored VWAP. And this is probably more of a money manager technique than a day trader's technique. But you could anchor it to certain areas in your chart. And I anchored it to these lows here, the April lows I was just talking about. And that's that anchored VWAP. And we're still trading south of that, right? So someone might argue, well, this is, sellers are still in charge of this market. And I wouldn't argue with them on that point. Moving over to a daily, again, little baby candle consolidation mode right now. We have a long period of time before some of these pauses. Remember, some of these pauses were 90 days. I mean, that's a long period of time. So we're going to have some of that uncertainty right now. But this uncertainty today is just manifesting itself in like, hey, we don't know which direction to go, right? We don't know. So I'm going to say, hey, this is a sideways market. What does that mean when I get to a 10-minute chart? Well, that means I'm looking for places to go long or short. Right? I don't have a overly bullish bias. I don't have an overly bearish bias. And that's kind of what I'm talking about. Crypto John, anchor weighted VWAP. You got that right. That was the anchored weighted, volume weighted average price. You got that. And I say VWAP. We're going to get that controversy out right away. But you could, there's an art to it too, Crypto John. You could draw it to different, peaks and valleys, or you could even anchor it from the beginning of the year as well when you're looking at a longer time frame. Oh, here we go, firmament. Oh man, here we go. Yeah, so Legion, that's another way. You could draw it from the beginning of 2023 to the high in December. There's all sorts of different ways to do that. So now I've kind of pivoted from to my 10-minute chart now, right? So now I'm open-minded. Now I'm like thinking, okay, I could, I'm either looking for places to go long or looking for places to go short. Now let's see what my really short-term bias is. Like, what's going on today? Well, we had a kind of a trickle-up effect, and then sure enough, right after the London session, right, those are those purple lines. Those are the London initial balance, and I'm looking at a 10-minute chart, and we sold off pretty good, right? We sold off pretty, I would say, responsibly. I mean, this isn't an overly crazy sell-off. And then we hit some gamma levels, which we're going to talk about in detail in a couple minutes with Fabio, our good friend from Italy. I do want to try to kind of talk to Fabio about maybe getting a little bit of help here because I am going to Italy in September, and with the euro, the price of the euro right now, I might not be able to afford a hotel room. So I might see if I could sleep in his couch. I don't know, maybe he'll let me like crash on his couch when I'm there. We'll find out. So in any event, we're going to go over some of these in a minute. Other markets to kind of look at. We talked about palladium before. And let me just kind of tap on that, and we'll go to a daily chart here as well. This is one of those commodity markets, right? This is probably an industrial metal. Tracy is way more knowledgeable on what it actually is than I am, but it's a futures market. It's a futures market we track, and when you think in terms of recession versus and supply and demand, those are both part of the equation. A lot of that drives this market, and so and sentiment as well. But we have an incredible rally going on right here, and actually, I'll just draw a fib really quickly just to kind of highlight this market. It's it's tradable, folks. You got to, pay attention. You got to do your homework and really understand what drives this. But high to low is where my fib is, and we're almost to that 61.8. We just tap in that 61.8%, right at that 50 EMA, and two areas of interest collide. All of a sudden, a light bulb goes off in my head. Aha! We're at a transition point. It's a pretty nice rally up. And we want to, I would like to see a close above that 61.8% and then continuation buying the next day. And then I would be like, all right, this is no longer a downward move. We got to change all our fibs. This is an upward move. That 61.8% to me, closes above it represent that just confirms a directional change for me. So this is platinum. It's a pretty sweet market to take a peek at if you haven't already. But again, specialty market, so be sure you're aware of all the the tick sizes and all of that stuff if you want to get involved. And then we even have some really nice gamma related levels that I've put on our intraday chart, and it gives us some pretty nice levels here. There's some pretty nice levels that you could use as areas of interest, including the daily pivots, volume profile, or whatever other stuff you're looking at. Now that we're in the metals, though, let me go really back one step further and just take a look at that daily. Yesterday, I was like, all right, this candle, this is a bearish reversal candle yesterday. But we didn't have any follow through one way or the other. We didn't have any follow through. This is silver, one way or the other. Today, again, a baby candle, high to low, really small. All the markets are consolidating sideways right here. And we're right below that 50 EMA right now, right below that 61, right below the 50. So this is an important level here. Are we going to break on through, and is this direction going to change, or is this just going to be maybe a little bit of an extreme retracement back up before we go back down? I don't know. I'm uncertain here, but we're right between that 8 and that 21 EMA. All right, so let's that's my speech for today. Let's go ahead and let's get Fabio in here. Fabio, are you there? He is. Fabio is in the house. How you doing, man?
Very good. How are you? Nice to see you again.
Oh, it's great to see you, man. You looking fit and healthy.
Nice, good. You too. Where in Italy are you going?
We're actually we'll be in Rome for a little bit. I know it's they have their special Jubilee there, so we're not gonna go till September. Hopefully the crowds will die down a little bit. And I am Catholic, so I'm all for all that stuff. And then we're gonna shoot over to Sicily. Probably this time we're gonna go to Taormino, and we're gonna be on that east side of the island. Last time I went to Agrigento, I was on the south side. So I want to see the east side and then drive down to Syracuse and all that fun stuff. And if you have any recommendations, let me know.
Absolutely. I will.
So how's everything going at Mentor Q?
It's good, man. It's been very busy. Of course, the biggest challenge over the past couple of weeks, I think, has been with dealing with the market sell-off. So I think for us, risk management right now is the key word that all our users are looking for because of the increased volatility. But at the same time, there's going to be a lot of good opportunities with this high vol. And of course, this week is going to be also very important because we have OPEX coming up. We have VIX expiration tomorrow. So I think there's going to be a lot of interesting moves that we're going to see on the back of that. So I think the key part has been really risk and leveraging data to avoid emotional trading. So we've been really focusing on helping our user basically stay ahead of the curve by looking at the data rather than just looking at the emotions. So I think, yeah, that's been our key focus for the past couple of weeks.
Yeah, I mean that's a big deal, right? That's arguably the biggest deal is your emotions and your cognitive bias, which was the thing, right? You have cognitive bias, you believe or belief perseverance is another name in trading psychology. You just think you're right. You think this is what's going to happen. In reality, you're not waiting, you're not looking at the technical levels and thinking about what the dealers are doing, what the institutions are doing, and the bigger picture.
Yeah, and I think that the key part is that we, like you said, we always have a bias that the worst is over. So we are always like skewed to, oh, we're dropping 5%, let's buy the dip and let's make money for tomorrow. But in reality, you need to look at the data because the smart money are not looking at the emotions, so they are trading with the data. And of course, not last week was crazy, but the week before also was really big for user because everybody thought the market was at the bottom, and in reality, dropped another 5%. And of course,
Yeah.
that drop, the institution were actually selling and not buying. So if you know where the flow is going, you can kind of like be more prepared. So that's why last week we were focused a lot on that for sure.
Yeah, no, absolutely. So we've seen that, we've seen the dashboard before. We've seen a lot of the Mentor Q tools. What's new on the horizon? Is there some new stuff?
So I think the key part is really we've mentioned before, but of course our Q score I think is very, very important, especially for traders who are not maybe used to the option market. We really try to simplify it. So I don't know if you guys can see my screen yet, but basically we're trying to give you like a data-driven approach to look at the asset that you trade, whether you're trading futures, whether you're trading indices. There's a lot of interesting moves on gold, for example. So with this market sell-off, like the risk-free asset that are typically treasury and gold, within treasury, we didn't see a lot going on there, but gold has really outperformed during that volatility event. So we can look at, for example, the levels on gold. We can look at like some swing levels there as well. And we can also provide you with some data-driven insights on how gamma could affect the price of the asset.
Yeah, and so let's break down. You have several different scores up here. Let's just break those down for people who have not seen this yet.
Yeah, absolutely. So the scores are broken down. So think about the Q score, which is the fourth score that you see at the top here. Think about when you see like those analyst consensus rating that you see on companies. So if you look at Bloomberg or other providers where you have those analyst recommendation scores, we kind of do a similar job, but we're trying to break down the asset based on data. So we look at the option flow. The option flow is really looking at the core data that you see at the bottom. So our net gamma exposure, the JAX level that you guys have on the chart. And basically the idea is that the option data can tell us if we are in a bearish trend or a bullish trend. So the option data typically predicts, because it's driven by market sentiment. So the big institutions are going to position themselves based on their thesis, based on market events. So when they heard the news about tariffs, suddenly start buying puts because they don't know really what was going to happen. So as a retail trader, you can look at that data and you can see like kind of like these charts right here where there's not a lot of like really important call activity until the 5,800 level. So we're kind of still far away from that positive gamma environment. We're looking at SPX, but we can also look at the future as well. And then basically the option score will basically tell you if the market is bearish or bullish based on option activity. The score goes from 0 to 5. So 5 is really bullish, 0 is very bearish. Similar to volatility, 0 to 5, 5 is very high in volatility and 0 is very low. And why is volatility important? Because not only you can use volatility to understand what the market is thinking. So if we are in a very high volatile environment, suddenly we're going to expect a very big move like we saw last week, right? So where the volatility is very high. And also the premium that you pay for option is much higher. So again, when we look at that, the hedging activity of market makers and all of that stuff, looking at volatility is very important. And basically also it can help you understand how much you can risk or you can lose. So if you're, for example, if your average stop loss is 5 points on yes, and suddenly you come in and you see that the score is very high, if you don't adjust your stop loss, you might be taken out very fast because the volatility of your asset has increased very fast.
So looking at this, when I see that the option, low option score of 1, right? And this is the it's a very low, it's 1 out of 5, right? And then you see the high volatility at 4. Sometimes it's hard to reconcile.
Yeah, think about when you see the low option volume is because the market is overall bearish and they're also paying much more for premium. So they're willing to actually pay more because they are scared that a big event could happen. So for example, VIX was at 60 last week. So all the options were very expensive. And basically the idea is that you can use the data first. If you are an option trader, you could sell options and you could find strikes that could be far enough for you to still make profit with the premium because you're paying a high premium and you're betting on the volatility crash. So for example, last week, a lot of really our users were selling VIX scores because they believed that the VIX was going to drop. And of course, you're pocketing on this drop in volatility. So if the score goes from very high to maybe a 3, you're making that delta. So you're making that profit in premium because the volatility is decreasing. So basically, really, the volatility is not giving you a direction, but it's telling you the fear in the market. And that can tell you, like, for example, if there's a lot of volatility and we are also very low, we're very bearish, suddenly there could be a very, very strong move to the downside, like we saw like a couple of weeks ago. But at the same time, we're also in a negative gamma environment. So we know that dealers are selling when the market goes down and buying when the market goes up. So if we are hitting those big levels right there, it could be that the price could accelerate to the downside. So knowing this kind of thing is very important because you don't need to trade options, but you need to understand that those plus 10% that we saw last week was very driven by news, of course, but it was also driven by algorithms and option flow.
So let me ask you about then the 1 day. So the 1 day expected move, right? And on my intraday charts, I put that 1 day max and that 1 day min. I paint those on my charts, and they really give me a really nice area of interest a lot of the time. But let's talk about the formulation of those.
Yeah. So basically, this is our proprietary algorithm that is basically designed to give you a maximum and minimum level for the day. So we have like some backtesting results. So on SPX, we looked at 4 years of data, and the price closes below the 1 day max and above the 1 day minimum on about 85% of the cases. So in normal circumstances, take away the last few weeks, those levels are very well respected. We actually have a very interesting use case just before the announcement, where on the day before the announcement of the reciprocal tariffs, where the price went from 1 day min to 1 day max of NQ and then bounced back. So that was like 550 points from one level to the other. That was a very, very, very great move. And basically those levels were very heavily respected. But then of course you have the 15% of days where you have FOMC meetings or catalysts where really no models can predict that Trump is going to come up and say that we're going to halt tariff for 90 days. So those are like impossible days. They're typically black swan events that you can't really predict. But at the same time, if you can use the data to position yourself on the good setup and look at probability, then that can help you mitigate those events and have more successful days, for example.
Yeah, that totally makes sense. And then the other category there, you had the implied volatility, I think, on a 30-day, right, on 30-day options.
Yes. So that's the implied volatility versus historical volatility.
Okay.
We know that volatility is mean reverting, so we want to understand if we are in a very high volatile environment. We also have our high-V rank there. So again, for those who are selling volatility premiums, who are looking at the risk that you can take, those are very, very important metrics. So implied volatility, historical volatility, 30 days, very important. And then also we have, I don't know if you can see my screen. Okay, one sec.
We'll be right back, everybody. Hang on. I'm getting Fabio's screen up.
Okay, 1 second. Sorry, guys.
That's all right. Take your time. And so just so everybody knows also, the dashboard is pretty, the dashboard's good because I could track all the major futures markets as well as the non-futures markets, right? So I could see all this matrix data. And you did a great job of getting the futures markets in there as well as the cash markets.
Yeah, absolutely. I'm just reconnecting. Sorry, Jim.
No, that's okay. That's all right. Take your time. Are you in Milan right now while you're doing that? Let's figure out where you're located.
I'm in Madrid still currently.
Ah, nice. Never been in Madrid. Heard it's nice. Yeah.
It's a beautiful city, yeah. All right.
Although I heard Barcelona's getting a little rough.
Yeah, that's what they say. It's nice because it's by the beach, but it is getting a bit rougher. Cool.
All right, we are back. So, we see your screen right now, and let's walk us through the rest of it. We haven't covered it all yet.
Yeah, and for volatility, it's also important, for example, when we look at our skew chart. So what the model is doing is looking at out of the money option, and in particular, we're looking at 25 delta puts versus 25 delta calls. The reason why we do that is because those who are buying or selling out of the money option, they believe that there could be a strong move either on one side, on the call side, or on the put side, and they're paying less premium because they're far out of the money. So the skew tells us the sentiment, whether we are in a put buyers environment or in a call buyers environment. And also what you see here is basically that this is the maximum. So we're now seeing like a down move right there compared to yesterday, but we were at the maximum level of our put bias. That means that people are willing to pay more for protection. So the implied volatility of puts is much higher than calls. And that also can tell you a sentiment indicator. So the market is really worried about a downside, right? So we are willing to pay more for protection, basically. That doesn't mean that the market is going to go down, but that's what the market is thinking and how they are preparing themselves.
That totally makes sense.
The other important part, I think, for this week is to look at the matrix right here. This is the SPX. So we are looking at the 17th of April expiration. So there's about 22% of negative gamma expiring, which is quite high. It's a lot of gamma expiring this week. And basically, you can also see the levels that will be pinned. So will be those 5,400 and 5,410 are the kind of like levels for that expiration. So when we are going to approach those levels on that day, or if the market approaches those levels, it's going to be very interesting because there's a lot of negative gamma. So we know that if we cross down these levels, the dealers are going to potentially accentuate the move if we're going on the way down. So looking at those levels is very, very key. On the other side, if we open the VIX, for example, we can look at the same picture there, and we can see that basically on the VIX side, there's about 24% of options expiring tomorrow. So there's going to be a volatility reset at the end of the day, so maybe Thursday or Friday, because a lot of like gamma really is expiring tomorrow. So again, when this happens, market makers do not need to hedge, so they're repositioning themselves, and then it's going to be interesting to see how they do that, whether they still think there's going to be a lot of downside move, and so they might be re-hedging on those expirations. But yeah, basically like looking at this kind of insight is very key for this week, I would say.
Yeah, it's kind of a weird week though too, because Friday most markets are closed, I think, because of Good Friday. So a lot of these options are expiring Thursday. Is that right? What would ordinarily expire Friday is going to expire Thursday.
Yeah, Thursday, exactly. So the VIX should expire tomorrow, and the SPX should expire Thursday. Yes. So again, next week is probably when we're gonna really see a lot of interesting move. But again, Monday is Easter Monday as well, so really interesting time.
Yeah. So it seems like you lean on the VIX a lot as part of your analysis for many of the markets. Is that true?
So I think what we've seen in the past couple of weeks, and we've been trading live, we've seen that the biggest success is when the VIX was hitting those big levels. So last week we had a core resistance at 55. So if we go back maybe a few days, that core resistance here was at 55 right there. We were trading live, and we were seeing that as the price approached those area, then we saw the big volatility crash. And of course, the news was driven also by the news, but this big area here was very, very important. So if you are trading NQ or ES, look at the levels on the VIX to understand when there could be a reaction. So similar, like you use the 1-day max and 1-day min, if you use it on the VIX, you can then look at the opposite side. So if we are hitting the 1-day max, most likely the price of the VIX could come down. Therefore, your ES or NQ will go up because they are inverse correlated to the volatility. So we've seen a lot of like traders using those levels and being very successful last week. So when you have like a big level, like for example, there was one day where we had a put support on ES and a core resistance on the VIX, the volatility crash and the price of ES just spiked all the way up. So yeah.
Yeah. So going forward now. So we're, going forward now, we had that extreme move in the stock index future, well, in all the markets, but most notably in the stock index futures, since that's, pretty much most people track that first. Going forward, though, are we out of the woods, do you think, or is there more of this to come over the next 90 days?
So I would say we are not out of the woods yet, and you can see it from obviously the volatility is decreased, but at the same time, I think one model that you guys can use is our swing model, and we have it on stocks, ETFs, and indices. So if you are trading ES, you can use it on SPX. If you're trading NQ, you can use it on QQQ. So let's look at it on the VIX. So this one is the 5 days. Similar to the 1-day expected move, we are doing our swing model. Swing model is actually more advanced because we're using a machine learning technique to forecast the next 5 days and 20 days of price action. So for example, what's interesting here, it's actually, let's go back to today's data. So if we go back to today, similar to how you plot those levels, you can also do it on Ninja where you can plot the swing levels as well. So you can actually convert this swing level from the VIX to SPX or all the other assets, and we can look at it as well. But basically, the idea is to forecast the bands on where the price will be in 5 days from now. So here we are looking at a lower band of 27.95 and a risk trigger of 33.83. So the model is giving you those two bands, but in reality, it's trying to predict the direction. So whenever you see a lower band and a green, the model is kind of bullish on the price of the asset. So that means that we forecast, and the model is trying to forecast that in 5 days from now, the price of the VIX should be about 27.95, which obviously can tell you something that we're still expecting a high volatility, because VIX at 27 is still kind of high, right? Of course, it was at 60 last week, but it's still kind of high. And basically here you can also see the success rate. The success rate means that over the past 108 days, which is the chart that you see here, the model was successful on 71% of the cases, meaning that if we had a lower band, 5 days in the future, the price closed above this lower band. And if we look at our 20 days, then in the next month, we're still forecasting a VIX to be above 25, which is obviously not as bad as what it was last week, but it's still going to be kind of like a high volatility. So 25 is kind of like still a very, very high VIX. And of course, here you can see the backtesting results here, which is 87% over the last 93 days.
Yeah, I mean, my line of the sand is for the VIX is 14. So even 26 is miles beyond that.
Yeah, so typically from 25 to 35 is when the VIX is really high. Above 35 is obviously those black swan events like COVID, like what we saw last week. And like looking at the fact that the option data is telling us that for the next month, we're still going to see kind of high VIX is kind of like, of course, can give you an idea of where we are right now in the market. The other thing I would also monitor is the Q score, and not only look at the numbers. So don't just look at 1, 3, 5, but look at the change. So if we scroll down in the dashboard, we can see our different scores. So this would be our option score and the historical data. So I think we helped a lot of users being prepared for this crash, because if you look at right here, when the option score was 5, this was like beginning of February, the tariff news came up and suddenly everybody went into onto the protection. So everybody started really getting worried, right? So you're following the institutions and the score goes from 5 to 0 in a matter of a few days. And suddenly we start seeing this massive drop. And even though we saw like a kind of like a reversal, the option score has not really changed. So even if we think, oh, we're out, we're good now, in reality, the institution are still worried about what's going to happen. So it's not that we are out of the woods. So looking at, for example, when this goes from 0 to 3 or 5, then that's going to be very interesting. Another thing, the momentum score is kind of interesting, because even though the price is kind of going up, the momentum score is still very, very bearish. And you can see it here. And the other thing,
but on the momentum score, go back to that for a second, if you can. So what would traders look for now for something to change on the momentum score? Like, so are we looking to get back up to that 5 level, and then we could kind of translate that into possible price movements to the upside, or no?
Yeah, so the momentum is looking at past prices and technical indicators. So it's not just like moving averages. We built like a kind of complex indicator looking at momentum. So basically what you want to see is kind of like these spikes right here. So you want to monitor, right now it's kind of negative. So you want to, it could really change in a matter of a couple of days. And you want to monitor, like, for example, when like you see here, this kind of like predicted a kind of like 3 days kind of swing right there. But right now we're still in this kind of negative environment. And so basically, I think that the best part is to look at those big changes from one day to the other one. That can give you like some early warning signals that something could potentially change. And the other thing that I think is very relevant is also the seasonality. So again, if we look at the drop, so not just looking at the number, we are in a good seasonality. We see the drop here, and suddenly the market drop. We see the spike, and suddenly we see this kind of like nice rally for the last 3 days. And then of course the seasonality kind of dropped immediately, and then we started seeing kind of this move right there. So now we have no seasonality, so there's not really a signal that we can derive from there, but we need to wait until
So
something
when I
changes.
think of seasonality, I think in terms of calendar months, right? Oh, and in March usually the S&P does this, not always, but usually. How are you measuring that seasonality?
So for us, seasonality is using a similar approach where we go back 20 years. So we take data for the past 20 years, but we are not doing a seasonality based on months of the year. So we're not like, for example, when you do natural gas or crude oil, you know that the demand of natural gas will be higher in November, December because of the heat and weather. So that seasonality is more on the commodity space. We use seasonality to understand the past 20 years of data. How can they help us predict the next 5 days of price action? So it's kind of like we call it seasonality, but it's kind of different. We are trying to look at seasonal trends over the past 20 years to predict the next 5 days of price action. So as a trader, it's really like an indicator that can tell you like, are we in a bullish seasonality trend and can the price potentially go up over the next 5 days? Or are we in a bearish seasonality? And also monitor the shifts. So are we going from bearish to bullish? And then you can use that insight to understand, okay, how is that affecting? And then we also have some back testing results on the website as well on strategies built on those seasonality momentum scores. Yes.
But right now it seems like the news cycle trumps everything else, no pun intended.
Yeah, there's no kind of, the market is still kind of in the same situation. So but I think like we need to monitor like I mean, if we look at this chart, we are kind of still buried in both, so we're still like, the market is still very worried about what could happen. So I think, we have to, as traders, we need to look at that. And we also need to understand how volatility could affect the asset that you trade. So,
yeah, I totally got it. And by the way, for those tracking SPX and QQQ, there's a translation on the Mentor Q plugin for NinjaTrader that does it for you.
Yeah, so Ninja, you can convert those swing levels, you can convert the different gamma levels from, so for example, like if we look at gold, very interesting to look at, for example, the flows on GLD. So looking at the option activity on GLD, really high gamma there. And then of course you can also look at the Q score there. So we are in a very, very high momentum, very, very high option. We're in a positive gamma. And basically, obviously, we've seen the move that gold is having. And then, of course, we can look at our swing model. So if we look at our swing model, in the next 20 days, we forecast the price to be above 278.81. This is on GLD, but then you could convert this to the future contract. And of course, the model had a 94% success rate. So the way you could use this is directional, but you could also use this to sell options. So if you were to sell option using those levels, you would have been right on 94% of the cases, and you would have just pocketed the premium. So the idea, that's the idea.
Let me just shoot in here. Selling options is you've got to be careful. There's an awful lot of there's unlimited risk when you do that, and over the course of my career, you really have to know what you're doing to kind of protect yourself there. I just wanted to throw that little disclaimer out because it's a little bit more risky than buying options or even, in my opinion, just trading futures outright.
Yeah, of course, absolutely. Yeah, you need to manage I mean, again, risk is the most important part right now. So
yeah, for sure. Okay. All right. Any other widgets or data points you want to share? Because I do want to ask you about some markets also going in a little bit.
Yeah. So I think the other key point, if you're a future trader or if you look at indices, is looking at the screener section. So what I normally want to see in the morning is the highest change in gamma and the highest negative change in gamma, because think about if you trade ES or NQ, you still want to monitor stocks like Nvidia or Apple, the Max 7, because they could actually give you an idea of where the index could potentially go. So looking at the highest change in gamma, we can see the asset that I've seen versus the previous day, the highest increase in positive gamma. So for example, the market has increased about 109 million in positive gamma on NVIDIA. So what's happening that could affect NQ, that's the highest negative change in Jack. So if you see, for example, the SPX and QQQ are here, or IWM, for example, and if you trade the Russell, you might want to know that there's been a lot of negative gamma piling up on IWM. So that could affect your Russell price and your Russell trade and so on.
Yeah, totally makes sense. And by the way, Fatfish and the one of our community members, been a long time community member, just said, just went through Mentor Q site. It's badass. That means good, Fabio.
Thank you. Yeah, thank you. I really appreciate it.
Oh my goodness. How about treasuries? Could we how do you view the U.S. Treasury market?
Yeah, so with futures, we have the bond futures. So you can look at the 2 years, 5 years, 10 years, and 30 years. So you have that there. And we also have, the gamma levels right there. So for example, you can look at the different expirations. You have the option matrix on those different futures, or sorry, on the different expiration there. So we do have those covered. And I think on the treasury side, you can also use our CTAs model, which I think is very important because when you are trading futures, especially, you want to follow where the big money are going. So CTAs are typically, I wouldn't say leading indicators, but they could actually give you a really nice idea on where the liquidity is going. So if you are, for example, if you are thinking, oh, I want to go long because I think there's going to be a rebound, and suddenly you see that all the CTAs are actually short. These are big money managers that are actually bringing a lot of liquidity in the market. So following these moves can help you understand if you are on the right side of the market and take away your bias. So look at what the big institutions are doing, and we do also have it for treasury. So for example, if we scroll all the way down, let me see. Okay, we have the 2-year treasury here. So you see how CTAs started like going long treasury here, and of course, on the other side, if we look at the SPX and NQ, the price kind of drops. So there's an inverse correlation there.
So is the CTA data, is this daily data or
yeah. Once a day it updates, yes.
Got it. Okay.
You can also go back in time if you want, right here.
Got it. Awesome. Yeah, we talked about this a little bit last time. I'm embarrassed to say I haven't explored this area of the website of the app as well as I should have. I'm going to start taking a deeper peek because, we talk about influencers on social media. There's influencers in the market, right? These are the big fish, the people who are taking big positions with a lot of margin behind them.
Yeah. Yeah, and also I think what's another important part is that whenever you're trading futures, you always need to look at the assets that are correlated. So if you trade ES, you need to understand what's happening on SPY and what's happening on SPX, because the customer of these three assets is different. So people that buy SPY are typically the large pension funds in the US, the 401k plans every month put money into the market. They buy SPY for a longer term view, right? They're not day trading, they're not looking. So if you start seeing a lot of put protection on SPY, that doesn't mean necessarily that the market will drop. It just means that maybe those funds are just seeking protection because they had a really nice return. So like, for example, last year in October or November, we had a lot of put activity on the SPY, but the market went up crazy through the year. So they are just really trying to mitigate the risk of losing that return. But it doesn't mean that necessarily the market would drop. And similar to yes, you have SPX, or maybe SPX is more used by large hedge funds that are trading those options. So monitoring how these three assets are kind of like working together is very key because it can give you like better insights, basically.
And that's a great point. And that's a great point. There's different users, right? There's different primary users depending on which one of the three categories you're looking at.
Yeah.
Very, very awesome. So we talked about SPY, QQQ. What about like Russell or Dow? Are those indices that are meaningful on Mentor Q or no?
Yeah, we do. We have again, we have the same. We have the RTY future. So if we go in the future, we cover RTY, we cover IWM, which is the leading ETF, and then we cover the index. So if you come here, you can access the data on Russell. You can convert the data on IWM. You can also have access to the swing levels on IWM. So if you want to look at the longer term trend on Russell, simply type IWM, and then of course you get access to all the scores, all the models, and the different charts that we show. So for example, yeah, the model is kind of like bearish on the Russell. So over the next 20 days, we forecast the price to be 202.96. This is IWM, but you could potentially plot that into the Russell future as well.
Got it. Out of curiosity, do you have a forecast for silver? Did we talk about this yet?
For silver, we can use same the ETF. So we can use our SLV, for example, ETF, and basically we can look at the option activity there. So we are very bullish on the option side. So you can look at the matrix. We see all green. Always like look at green and red. I know it's simplistic, but it can tell you if the market is kind of bullish or bearish on the option side. And then we can look at also the swing levels. So if you look at here, for example, those bands were respected on 95% of the cases for the past 103 days. And I think the model is looking at the 26.62 on SLV, which again can be translated into the silver future. Yeah.
Yeah. Okay. Excellent. Yeah. No, we've been tracking a lot of these precious metals and industrial metals and copper, thinking about, global recession or not global recession, what's happening in China, and all of these kind of macro kind of things that go through your head when you're looking at some of the commodities.
Yeah, and we also have like sector ETFs. So for example, the big banks are going to report very soon. So if you want to look at sector trends, that could be interesting. If you want to look at countries, we have country ETFs. In this case, we're looking at China right here using the FXI ETF right there. And then you have all the scores as well. And then, of course, like if you're looking at the SPX sectors and you want to understand if consumer discretionaries are bullish or bearish, you can also do that very easily.
Yeah, totally makes sense. Yeah, my understanding is the banks are killing it on their trading desk, which means they're all probably plugged into Mentor Q right now.
I think they're very worried still, even though they might have good returns. I mean, I have a lot of friends that work in bank, and they're really worried right now of what could potentially happen because, of course, they have a lot of risk. So
Yeah.
that's the main part. Yeah.
Yeah, it's uncomfortable, especially if you're a money manager and you are accountable to customers, right?
Yeah. Yeah, and also think about, we had obviously a lot of like issues last year with the regional banks or those big banks kind of like bailing out all deposits. And so looking at what the banks is doing, if they're taking less risk, if they're more concerned. So the earnings is going to reveal us some really important information, I think, of the overall sector. So looking at the banking sector is key. Looking at the consumer sector is going to be very interesting to understand if people are spending less now because they're worried. Are they spending less on expensive products or things that are not necessary? So all those data points are going to be key in the next couple of weeks. So yeah.
Yeah, no, for sure. I mean, I've been tracking the DAX and the Euro Stock 50, Euro Stock 50 being that, the Dow equivalent, the blue chip equivalent, and looking at those automobile. I think there's three big automakers in that index, and they seem to be doing really well.
Yeah. Yeah, I
So,
think for Europe, I think the tariff situation is going to be key to monitor. What could that, like the impact on those, automakers or also all the other producers that are selling into the US, because that's the biggest market, I think.
well, yeah, in the Eurozone, it's a little harder, right? Isn't there what, 28 members of the EU or some large amount of independent nations, sovereign nations that, want to have a position and want to have a say in this whole thing. So it makes that negotiation that much more complicated.
Yeah, yeah.
Okay.
Yeah, and I
Yeah.
think like, I mean, I come from Italy, like we have a lot of exporter of food and other products to the US, and they're all very concerned because um, the price of what you buy in Italy and compared to what it gets to the US, like it's really like 3-4 times more already. So with additional tariff, that could have a very big impact on those producers. So yeah, monitoring that situation for Europe would be important for sure.
I got it. So let's going back to the dashboard. Is there what's next? Do you have plans to expand this? What's in the hopper? What's in the works behind the scenes?
Yeah, so I mean, there's a lot of things that we're gonna do. So in the short term, we are working on crypto data. We are working on European futures. So we are looking at DAX and Eurostox future levels. So that's part of the roadmap. We are gonna integrate AI to help users understand the data. So the goal is obviously there's a lot of information, but how can I then simplify it further? So we are integrating AI, and then we are gonna basically start moving towards our real-time analytics. So the second part of the year is going to be focused for us on building a real-time platform. So from a user standpoint, we are working on the back to potentially provide you with real-time information, more AI models on flows, and all those kind of things that yeah, we want to work on.
Yeah, that's a beautiful thing for sure. We're looking forward to it. I'm on it every morning. I have my levels on my intraday charts. We cover them all the time, and it's just it's when you see them on the chart, and it's a line on the chart with a label,
Yeah.
but it means something, right? Jax 1 is different than Jax 5. And because of that, it really helps me anyway, kind of focus in on the more key areas of interest for a day trade, for an intraday trade, right? Because that's what mostly we do. So that's probably for me that's the most helpful for me when I'm kind of looking into this data. The dashboard's great too. Don't get me wrong, but I love the lines, man.
I mean, the biggest challenge for us was we come from the institutional side. So I worked at Bloomberg for about 11 years. So the biggest challenge was breaking down a volatility surface into something that people that have never seen that data can understand. So when we started building our indicators, we were like, okay, we need to build it as simple as possible. And the most simplistic way is have a line on the chart and just have something that people can resonate. So when we look at core resistance or put support, don't think about it in technical terms, but think about those are the big levels that the institutions are looking for and where the option markets are positioned. And that can give you an idea where there's going to be a reaction. So basically, like from a user standpoint, I think the important part is understand what those lines means. And then, of course, once you do, then you basically have a tool that you can use that can give you greater confidence, basically.
Yeah, absolutely, man. I appreciate it. So Fabio, thanks for being with us. I know this is really short notice, and I know you're traveling. You're not in your office in Milan. You're traveling in Spain right now. So again, it was a last minute kind of thing. Hey, let's see if Fabio could pop in here. So I really appreciate your flexibility.
Thank you. No, it's great to be here, and congrats again on the show. It's amazing. I watch it whenever I have time. I always connect to see how you guys do. So it's
Yeah,
really
I mean, and yeah, that's it. The folks on the show are fantastic. The producers behind the scenes, ridiculously awesome. So I'm fortunate to have all these really smart people around me. So thank you for that very kind comment.
yeah, no, of course. Congrats.
All right, sounds good. Well, we'll have to get you back on. In the meantime, I'll keep you posted on my Italy plans
Absolutely.
for
Anytime.
September.
Let me know.
going to bring in Shy Girl, and again, I've just
My microphone. Hang on a second. And I'm back, everybody. Oh, boy. What a day. It is time for Shy, isn't it? Yeah. There we go. She's here.
Hey, how you doing?
How you doing? This is my favorite. By the way, this is my favorite time. This is my favorite time of the day right here. Me and you. Thank you for being here.
I knew it. All right, well, let's dig into some commodities today. Let's start with, I thought it would be interesting to start with 6J, which is the yen, because as we know, generally when we see a rise in the yen, and this is yen USD, not USD yen. When we see a rise in the yen, it usually signifies kind of a risk-off mentality for the equity markets because it is considered kind of a safe-haven trade. And so we've seen this, unsurprisingly, gain strength over, the last few sessions. Actually, it kind of started, I guess the low was back in December or back in January, and we've gone up since then. But notably, a lot higher recently, obviously, with increased volatility in the markets. So kind of what is this looking like to you, and do you see another leg up for this one?
Yeah, it's funny, this for the longest time, last year, the year before, it's just every day the yen was down, every day the yen was down, every day the yen was down. And now we're seeing the opposite, right? I mean, this is a pretty nice trend up. It's really respecting the 50 EMA, and now it's even respecting the 21 and the 80 EMA. And this is kind of a meteoric rise up as well. I don't have any targets on the upside. I'm going to get rid of this fib line. There's no retracement, but it's looking pretty strong. Even the slow stochastics are pretty strong as well. And it could stay overbought for a long period of time. So, but the yen it's one of the bigger currency pairs by volume. It's the second biggest, I think, at the CME group. It's a great market to trade, and there is definitely money flowing in to the yen US cross, which is, I guess, refreshing. There's targets on the upside. I don't know what those targets are, but intraday we have a little bit of a inside bar going on. And again, back to the Mentor Q, we have these great levels here. Traded through Jacks 2 a whole bunch of times. Respected the right now we have a lot of support at the bottom of the initial balance right now, and the bottom of the value area. Kind of a nice volume profile. And one of the things, I used to, when I was a commodity broker, Tracy, a lot of folks would be like, "Hey, I get home after work, and we have dinner and blah blah blah, and then I want to trade some market." Well, this is a two-sided market, right? And in Asia and in Japan, this market, they're open is in that evening hour when folks could pop in there and trade. So it's a great market.
Absolutely. And just looking at the 30-minute chart, it looks like we could be flagging a bit, prepared for another move to the upside. At least that's what I'm kind of keeping my eye on. So we will see how that goes.
Yep, there you go. There's the 30-minute. Very awesome.
Yep.
All right,
All
what
right.
next?
So next, let's dig into, let's do soybeans, just for an ag market. I know a lot of people like trading ags, and we don't talk about them often enough. So let's take a look, except for corn, but we don't talk about soybeans often.
Yeah.
Everybody expected sort of this tariff announcement was going to be bearish for ags, but really since that announcement in April, ags have gone up. So what are we thinking technically on this market? What are you seeing?
Yeah, so the first thing I have a rectangle that was already there. I was looking at this before. We literally hit kind of a swing high back at early April, April Fool's Day, as a matter of fact, and then we sold off pretty big, and then we rallied back up here. So now this little tiny, I know it's only one or two or three data points, but it's kind of an area of resistance. It was a touch point, so I drew the rectangle over just in case it might become support, kind of acting like support right now. We have that fast 8 EMA crossing over everything else, crossed over the 21, crossed over the 50. So the velocity on this move up is pretty good, and you can see it in the slope and the slow stochastics at the bottom of the chart as well. So this is looking like right now, this is looking kind of bullish. We have a little bit of a pullback. One thing I'm going to have my eyes on though is this candle here, right? We have a 1, 2, 3, 4, 5 day rally. And then we have a small body candle. It's almost a doji with the wicks about the same size. And when I see that, sometimes, oftentimes, not always, I call that a turnaround doji, which so far it is a turnaround doji. But I'm not believing that this rally is over. I think maybe we have a little bit of retracement and keep going, keep driving back up.
Yeah, and I think we're going to have to be looking at what this new farm bill entails, plus the extra funding that farmers are going to get because of the tariffs could give this market another leg up. So we will keep an eye out for that information for sure. And next, let's move on to platinum, because platinum is up pretty nicely today. Up $12, not shabby for this market. Was kind of lagging yesterday, but like looking at this 4-hour chart, for me, again, it hit my level down at, that 878 area. I was looking right under 900 and has continued to move higher.
Yeah.
So what are you seeing on the technical side?
To your credit, you called this, right? You called that buyers are going to come in here sub 900, and it certainly did. And 1, 2, 3, 4, 5, 6, 7 days in a row, and arguably today's almost the biggest green candle we've seen. We're plowing through areas of support and resistance right now. We tapped that 50 EMA, and I talked about this a little bit this morning. Really, what would be ideal for me to see a complete trend reversal is a close below that 61.8% fib. We're pretty close, which would mean also a close above the 50 EMA. So this is looking pretty strong as well, and it's kind of subtle too. The other interesting point is, on the sell-off we had 2 big days, right? 2 benchmark candles here, 1 and 2. And now it's an orderly kind of rally. It's almost as if the market is assimilating all the information, all the possible permutations that could happen, and it's deciding that price is higher than it was before. So I think that's a pretty nice kind of daily chart. And today is just a perfectly orderly rally here in this market. We're not quite to that 1-day max for Menthor Q, and it's never going to be perfect. I shouldn't say never, but when you see these levels, it's like, wow, this is really like a magnet beckoning this great area of interest right there on platinum.
And that volume profile looks nice as well, with that top heavy, your P, that P formation.
Capital P. Yeah. My middle initial is Paul, by the way, so I like the P.
Excellent. So fantastic. All right, let's move on to the silver market today. Again, this one we are positive on the day a little bit. I mean, barely 0.06%, but I'll take it. But it does look like, we kind of, again, had that huge sell-off, kind of had an orderly move higher, and now it looks like we're consolidating a little bit on kind of the daily and the 4-hour, which I like to see that consolidation, because often that means it's consolidating for a move higher. Not always, but percentage-wise, that's what the market tends to do. So what are you seeing, technically speaking?
Yeah, I mean, yesterday I was worried about the daily candle possibly signaling a bearish reversal, and instead, what's happened is exactly what you said. We have consolidation right now. We have price happiness. We have a baby candle, and we've seen so many small candles throughout today, and that again is suggesting a little bit of temporary price happiness and some consolidation right here, and we're right at that 21 EMA. The rally that we see, the sell-off in the rally is very similar to what we saw in platinum, except we don't have that big green candle today. On silver, silver's taking a breather. But I have the same price points, that 61.8% retracement, that 50 EMA. Love to see a close above there. And then I'm going to get my rally cap on, and I think we could kind of move it. On an intraday, volume profile is textbook. So Tracy, when you write your book on volume profile, I'm gonna cut and paste this chart for you to add to the book. It's a perfect point of control right in the middle here. And the thing that I love about when I see a point of control like this, look at how many candles since 7 o'clock this morning. These are 30-minute candles traded through that point of control. So when you have value area trading and you have a perfectly symmetrical volume profile, that point of control does tend to act like a magnet. And I think we're seeing that here today.
So I like to see that. I like to see that consolidation looking to me. Let's move on to crude because it seems to be stuck in a rut a little bit. Let's see if we can figure out what kind of direction it's going into. Now, what's interesting is we had the IEA report out today. They downgraded demand for 2025, not surprisingly, because of tariffs. They downgraded supply a little bit, even with, that was interesting, even with the additional barrels that OPEC Plus is bringing on for April and May. And the reason due to this is that the overproducers are cutting back from their overproduction in March, which was huge. And so really when it comes down to it, the market's freaked out. And ultimately, if everybody stays in line, hypothetically, if everybody stays in line with what they have promised for the month of April, we really should only see a 20,000 barrel increase, not yet that 187 that they had noted on the meeting, just because of the overcompensation from the overproducers from before. And so that, is definitely less than what the market was expecting when that initial announcement came out for certain. But technically speaking, what are you seeing in the markets? Where are we headed with this?
So really quick though, let me ask you, so IEA is different than EIA, right? IEA is the International Energy Agency, maybe?
Correct. And then EIA is the U.S.
Got it. Okay. So I know there's a lot of letters here. You got to know.
So IEA, I mean, I'm not a huge fan of IEA, I have said, but I have seen a notable change in their data for the last couple of months. We'll see if that stays, but they've been pretty much WEF compromised for quite a few years. So we'll see. It seems like maybe they've had a turnaround.
All right. Well, so just looking at the daily chart right now, I have a really, really, really loosely fitting triangle right now. We're seeing the breadth of the market kind of shrink a little bit. We're seeing this 8 EMA acting as a really nice guideline at the top of prices. We've touched it 3 out of the last 4 days, but didn't get any momentum over it right now. And again, a small body candle followed by yesterday's relatively small body candle right now. So something's going to give one way or the other here because we're almost to the tip of the triangle, but we're still at 60, almost a 61 handle right now. And it does look like it is probably consolidating a little bit. Intraday chart wise, well above previous sessions lows. I shouldn't say well above. Previous sessions lows was 60.59. And then the gamma levels again, there's JAX5 down here, which is It's 60 spot 50. At the top of the chart, we're seeing JAX 2 kind of framing the highs that we saw on the London Open at 62 even. And then right in the middle is JAX 4 right now. But there is kind of a little bit of a rectangle possibility here that I'm going to introduce into this chart. Some support, like 3 times, 1, 2, 3 times. Buyers brought us back up. Once we tagged, we just got into that 60 handle. Boom, buyers bring us back up to 61. We'll see if it happens again.
Right. My only concern about this market was when talking about auto tariffs came out, Trump said he was thinking about getting rid of auto tariffs, and we really should have seen a spike in oil prices after that, but we didn't. So caution on this market. I wouldn't be completely surprised if we had a leg down, even though I don't want to see that personally, but caution on this market for certain. But I think that if we do see another leg down, likely that will get bought up again just because of the fundamentals of the market. Again, that 55 being where producers start getting in real trouble.
Yeah. All right. That's great advice. Tracy, thanks again for being together here on Hot Commodities. We had some great information. Great morning, everybody, today. Appreciate everybody participating in our community, in the chat. Everybody's been positive with each other. Remember, high tides lift all boats, so thanks for being here. We're going to come back at 2:30. We're going to finish strong here with the order flow labs, guys. I do believe it is Stowe and XYZ with an extra E in the end. So, Tracy, until we meet again, thanks for everything.
Bye, guys. I'll see you at 2:30 in the chat.
2:30, we'll be there. All right.